with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 4th day of November 2013. Fall is in the air. Got the windows open. Look at the numbers. The Dow down 15, S&P up 2, NASDAQ up 8, gold up 4, crude down a penny. So, S&P positive, Dow negative. As we know, that won't work. Not for any length of time. That will have to rectify itself here at some point. The Dow down 14, cash market, S&P up 2. They don't go in opposite directions. The correlation between those two is probably stronger than anything I've seen demonstrated when it comes to trading. The ratio, we've talked about this so many times, 10 to 1. If the S&P is up 1 point, the Dow will be up 10. The S&P is down a point. If the S&P is down 10 points, the Dow will be down 100. Now, it won't be exact. It might be 95. It might be 105, but you get my point. It's roughly 100. And even though there are times in the day when they appear to be diverging like they are right now, trying to go in opposite directions, at the end of the day today, print a 5-minute chart, okay? On paper, thin enough you can kind of see through it. Lay them over each other, you'll be amazed at how perfectly they follow each other throughout the day, even though they do have these occasional periods where they diverge. Now, the really smart guy in the room is the one who figures out who's got it right, the S&P or the Dow. Because if I jump on the back of the one that's got it wrong, I can ride that thing to victory in the right direction. Unfortunately, it doesn't work out quite that easily, but it's something to keep you busy on a rainy day. All right. Interesting to note today, for the first day in quite some time, let me bring up a daily chart to show you this. First day in quite some time. Well, no, Friday was one of those days too, huh? All right. Let's see. Today's November the 4th. This is October 31st. Where'd November 1st go? Hey, something's wrong with my chart. Stand by to fix chart. Here we go. There's that November 1st hiding. Actually, we've had 2 days. This is our 3rd day now. Oh, I missed that on Thursday. Okay. Thursday, we had a new intraday all-time historic high, but the close, we did not have a new closing high. All right, let's back it up. Monday, Friday, Thursday, Wednesday of last week. Okay. Tuesday of last week, we had a new all-time historic closing high. Wednesday of last week, we had a new intraday all-time historic high. Now, this is in the futures, not the cash market. But we did not have a new closing high. Thursday, we broke no records. Friday, we broke no records. And today, so far, doesn't look like we're going to break any records. We've come a long way. We've drawn this fib a number of times. Let's just put it up there one more time. Because if this is going to become an actual retracement, although we're green on the day right now, we take out this little pivot low. The first retracement, the 23.6, could, by the time another day passes or two, could line up with the BBC and the 24, and that might be as much of a retracement as we get, which would then bounce us back up to maybe put in a little double top here. And this market is going to find a top at some point, and it is going to put in a healthy retracement at some point. I'm just not going to be the one that tries to call the top, because that can be tough and dangerous and so forth and so on. You know, in hindsight, we can look back down at the bottom of this most recent leg up and we can see this little doji and we go, oh wow, followed by this bullish. This is the perfect three candle formation down here for reversal with a doji. You got proper context coming down, you got the red candle, you got the doji, and then you've got the big bullish green candle following up the next day. Now, for a candlestick purist, buying the open of the following day's candle is kind of a no-brainer, except look at the risk involved. Okay, if you buy the open here at 83, your risk has got to be back below 40. Most of us don't carry 40 to 50 points of risk in the S&P. And so you, of course, even though you understand the bigger picture implications of this pattern, you still up here have to find some other way to enter the market to get yourself long without having to risk 40 points. Now, based on how far we've traveled, had you had that information in advance, are you willing to risk 40 to make 70? Yeah, okay. We didn't know it was going 70. This is a situation where you can flip right over to the slingshot. You know big picture daily that this thing is poised to go substantially higher. You can get in on any bullish long trade in the slingshot and only risk 8 ticks. You might get stopped out. Okay. You might get stomped out a couple times. What you're doing is rather than risking all 40 points at once, you're risking it in 8-point increments, okay? So you might have to eat 8, or if you get stopped out twice, 16. Maybe you don't have to take a full stop on all of them because you're using aggressive risk management and getting your stop up to break even after 4 ticks. See, there's a number of ways to do this without having to put on 40 points. You're accepting this risk, but you're doing it in bite-sized pieces as needed, because you just got to catch that one runner that's going to push you far enough, okay, that your stop's to break even and you're just letting it ride. Okay. But we're getting way ahead of ourselves. Happy Monday. Hope you had a great weekend. Hope you spent some quality time with your family. We are now back on standard time. No more daylight savings time. We're done saving. Now we're standard. The standard time only runs, gosh, I think 4 months. November, December, January, February. I think as early as March we go back on daylight savings time. It used to be split up about 6 months each way, but now not so much. So that's what we have from a big picture perspective. am I saying the market's going to pull back to 1740? I'm saying it would make perfect sense. It would give us, after a really big move from 1640 to 1770, which is a 130-point move, to at least get a 24% retracement. Would that be appropriate? It would. Trees don't grow to the sky. The S&P and any other market, they don't either. They put in a leg and then they retrace and then they put in a leg. Okay, leg, retrace, leg, retrace. But see, on these legs up, we don't get a lot of retracement. On the legs down, we get a pretty healthy retracement. Continuation of the leg down. And then here, when we don't put in a lower low, that's our signal that we're going to roll over and head higher. So, all right, back to the S&P. There's a lot of stuff on the chart here. I'll walk through a little bit of it in just a moment. These are still last week's zones, and you can see the carryover effect that we talk about, and that being the zones that were good and held and were rock solid all last week, Monday through Friday. The fact that 2 days have passed, a Saturday and a Sunday, doesn't completely knock these out of the water. Michael and I used to actually track them. We used to actually try to keep both sets on our charts, and it just got a little overwhelming. So now I'd leave the old set on into Tuesday for the benefit of the audience here. Of course, I have my list here with the current zones. And then by, Tuesday, Wednesday, then I'm sharing the zones. Not only the partners get the zones before the markets open every trading day, every Monday. Now, these are weekly zones too. So once they go out, once they're published, we don't adjust them or change them or do anything with them. Once they're published on Monday morning, that's it for the entire week. And as you can see, was this Friday? No, this would have been Thursday. We were hitting this upper zone and this lower zone. And then on Friday, we got, so close. And then we did actually come down on Friday and touch this zone, 50-51. And then on the Globex Open last night, we had some good stuff going on. I'll talk about that. I want to go to our good word for the day. For those of you that are new, maybe you're visiting us for the very first time, you found us on the internet, you perhaps went to a webinar hosted by someone else, possibly by David from Page Trader, and you're hearing about us for the first time, so you've come over to just check us out and see what's really going on. Now, let me just clear the air. Although we are the Christian Financial Radio Network, we've been broadcasting for 8 years. We broadcast for 5 years before we began to offer our educational program, our formalized educational program. So we've been around a while. And sometimes when people hear that name, the Christian Financial Radio Network, they think that what we're trying to tell you is that God tells us when to buy and sell. Well, unfortunately, he doesn't. He makes us work for it, just like everybody else. That old saying, that scripture which says that the rain falls on the just and the unjust. Well, believers and non-believers, doesn't matter. You still got to learn how to trade. Well, of course it matters, but for the sake of trading, whether you're a believer or a non-believer, you still got to learn how to trade. I know you've got some convincing arguments for God, and you tell him, hey, I'm not greedy, I'm not trying to get rich, I want to do good works, I want to build churches or orphanages or feed the hungry or clothe the naked or all these great things that you want to do with the money you take out of the market. God's answer is going to be the same to you as to the non-believer. He's going to say, you got to learn how to trade. So that's the end of that argument. Okay? Don't want anyone who's new to get any misconceptions. At some point in the program, we're going to pause for God to speak, and he'll tell us which way the market's going to go. Now, you have your own personal relationship, and he may say any number of things to you in that still, quiet place. If he starts calling the market, though, please send an email to support@cfrn.net. I want to be in on that. All right, our good word for the day talks about a demonstration of faith. It comes from Galatians, and it says, "The righteous man shall live by faith." Galatians 3:11. Many centuries ago, God revealed how true faith is lived out. God's word says, "What does the Lord require of you but to do justice, to love kindness, and to walk humbly with your God?" Now think about that. Doing justice is being concerned for those who are left out, looked over, abused, and oppressed. Loving kindness is being considerate, thoughtful, and actively working for the good of others. Walking humbly with God is seeing God and self from the right perspective, thankful for His grace. Today, when it seems that religious faith is seen as negative and even bigoted, I hope you'll consider God's Word. Only one person in all of history has lived up to this standard, and that was Jesus Christ. He alone was just and kind and walked with His Father. He can help you live out life today as a demonstration of what true faith really is. Why not try it? And that's our good word for the day. All right, moving to the chart. S&P 500 E-mini futures. If you're unable to see my chart, you might not be fully logged in. To fix that, you go to the home page of CFRN.net. On the right-hand side of the page, click the big microphone. That'll take you to a page. Follow the instructions. Get logged in. You'll be registered for the entire month of November. Okay? You don't need to register every day. That confuses the computer. Simply register once, and then what will happen is every day you get an email reminding you the show starts at 12 noon Eastern Time. All you have to do is click the link in the email and you're in. Okay? So watch for that email. Now, if you'd rather not get the daily reminder email, you can opt out of that and you'll still be registered. That's entirely up to you. We don't send those reminder emails from the GoToWebinar. That comes from Citrix. We do send a couple reminder emails throughout the week, typically on Monday and Wednesday or Monday and Thursday. Don't opt out of those, because if you opt out of those, you'll be opting out of everything we do. And now, if that's what you want, go ahead, but you don't want to do that. All right, so what did we have going on last night? Last night, we had stuff. Let me find it. We had a tweet that went out pretty early on. Let me find it. Okie doke. Good evening, traders. Quiet Globex thus far. Consider being short the S&P 500 below 1251 to 1249 or long above 57 to 59. And thank you very much to the partners and others who were quick to go, hey, didn't you mean? And so I sent out a correction. Typo on the ES trade. It should read below 1751 to 49 or long above 57 to 59. So here we go. 1757 was right out here. Get that squared away. 1757. Okay, let's find the Globex open, which would have been November 3rd. Oh, we're way off. Oh, that's going to be way down in here. All right, there we go, right there. 1757. Okay, 1757. November 3rd, November 3rd. All right, this candle here, right there, that little green guy. See, this candle says November 1st. This candle says November 3rd. These are hourly candles. So this was the opening hour last night on Globex. And our tweet said, consider being long from 1757 to 1759. The swing high was actually 60.75 on the first push. Now the initial, that same hour that we triggered at 57, we ran the full 2 points to 59. So in that 1 hour candle right there, you could have been done. If you hung around, you had an opportunity at 60.75, so that made the trade worth a total of 3.75. Now, as you know, we have this thing where we believe that important prices in important areas are almost always tested. Well, what's so important about 1757? Well, for one thing, it's important because I sent it out to you as a trade alert and a trade entry. And so the first run, as I said, 3.75. Now, we teach you to just go for 2 points a day, right? That's our mantra, whatever you want to call it. I'm just pointing out that the swing ran 3 3/4 points. But many of you were done. You were just done. You got your 2, you're very happy, and you're done. Price did come back to test, okay, 1757, and on the second push, it got all the way up to 63. So from 57 to 63, that would be 6 points. And then price came back to test the important price, important area at 1757. And so far, we got a swing high of 59.5 this time around. And so we have 2.5 so far. Okay, I'll change that as the show progresses if the number changes, but so far, swing high 59.50. So first swing 3 3/4 with only a couple ticks drawdown. The second push, there was a few ticks of drawdown. Let's see, the swing low here was 55.75. So yeah, we had a little bit, a few ticks of drawdown there. And then on the third one, the drawdown was to 56. So you had exactly 1 point of drawdown if you participated in this one. Okay. Now, people always say, well, how should I trade that? And we always cover it. It's always the same answer. You can trade it as the crow flies. You can wait for the slingshot to give you an appropriate setup. It's really a personal preference. Okay. When I'm giving out a 2-point window, as I did last night, 57 to 59, often it's hard. There's not enough room and or / time for the slingshot to get fully set up. And so sometimes when I just give you that 2 points in either direction, I'll say, this, like here, 57 to 59, if we trigger long and if we trigger short, I gave a 2-point window. Those you almost always have to trade as the crow flies if you're going to ensure that you get the 2 points that are on the table. It's what I call a window of opportunity. I don't have enough time to go through all of these, but back on Friday, during the radio show live, we put out a tweet and we shared with the audience, consider being long above 1753. Okay, this was during the radio broadcast. And that thing ran 6 points. And you'll notice where it stopped is where we had a previous important price, important area, 58. The previous trade that we had given out was to consider being long from 58 to 60. Okay, another 2-point window of opportunity. Now on this trade, we get triggered in at 53. Look where the swing high of that move is. It's that important price, important area, which was our trigger and support for this long trade, now becoming target and resistance on this trade. Okay? And, you know, we just, last week, even though there was only, I believe, 27 points from the top of the range to the bottom of the range, it was a great week. Some really nice two-sided action back and forth. Also, we had a soybean trade that we put out Friday during the broadcast as we were looking at the markets and looking at different charts with David. And it was our second trade on the soybean futures contract, ZSF4. Consider being long from 1256 to 1260. And so that triggered overnight last night, 1256, took us right up to 1260. We spiked it a little bit. Now we're coming back down to test 1252. So that was a 4-point move. Now 4 points, or 4 pennies in soybeans is the same as 4 points in the S&P. 1 penny in beans pays 50 bucks. 1 point in the S&P pays 50 bucks. So that tweet, which said again to consider being long from 1256 to 1260, it's a 4 penny move. That's worth $200 per contract traded. So if you participated in that, congratulations, nice trade. So 2 nice trades to start off the week, soybeans and the S&P. And with that, let me pass this over to Michael, because we also had a nice day today in the live trading room. Is that correct, Michael?
That is correct.
Do I have my facts straight?
You do. You do.
It was uber awesome, and it took how long?
To get our 2 points, it took 31 minutes today.
There you go. A lot of bell ringing going on today. Big day. 31 minutes. Now, guys, we don't archive that time that it takes us to get it to brag or to boast. We simply archive it so that it becomes more than some vague idea that, hey, wouldn't it be cool if a person could just take 2 points a day out of the market? I mean, just sit down and drive yourself nuts, okay, if you want. Imagine this. A man takes 2 points a day out of the market, and he compounds his earnings and continues to add contracts and add contracts. If that man did that, if he really did that and compounded his earnings and used those earnings to trade more contracts and more contracts, well, it's like that thing with the beans where at the end of 30 days you got more beans than exist in the world. Okay, it doesn't happen quite that fast with the Emini futures, but it happens pretty quick, quicker than you would think. It's the power of compounding. Albert Einstein called it the 8th wonder of the world, the power of compounding in the world of math. Now, I don't want to go any further than that for now, just to say we've taken a vague concept, a great idea, and we have turned it into hard, cold fact. Now, there were a couple days that in our 2-hour window this year, we didn't get our 2 points. How many red letter days have we had, Mike, for?
4, I think. Let's see.
4. Okay.
1,
so
2, 3, 4, 5.
5. Okay.
5.
So, I mean, we're human. I mean, the market treats us no differently than it treats you. The only difference might be in how we think about the market. That might be different. Okay, and that's part of what the free trial, which Michael will tell you about, and becoming a partner, what that's all about. Okay. So, with that, Michael, please take it away.
Excellent. All right, I will move the charts to Boston. we go, guys. In 3, 2, 1.
I can see your charts.
There it is.
You can see the
All right.
spreadsheet. Okay.
Got it. Good afternoon, everyone. Today is Monday, the 4th day of November, 2013. November. It's going to be 2014 before you know it. Anyway, the results of the live trading room today. Yeah, let's go back this way. We were -8 on soybeans. In the live trading room, we were -8 on soybeans. I did take another soybean trade right at the end that I didn't count. That down close right there below the trend line. Yeah, we took some profit on that, but I didn't count that toward the total in the live trading room because it was after the live trading room. We got -8 on soybeans, +2 on crude oil, +16 on gold. All right. This morning it took us 31 minutes and 2 trades to get to our $100 per contract goal. All right. We kept trading, obviously, and we took a total of, why do I have 8 there? I didn't take 8 trades. I did 1, 2, 3, 4, 5, 6. Should be 6. Took a total of 6 trades in the live trading room this morning. Not a lot of trading this morning, unfortunately. I probably missed 4 trades this morning. So there was probably 10 trades available in the 2-hour time frame. There's usually quite a bit more, but for some reason the markets have been really, I don't know, slow. There were some good opportunities, and we did manage to take. We took a couple of trades. We got 10 ticks profit on gold on a single trade, 10 ticks profit on crude on a single trade. At that point in the day, we were up $200 a contract, and we'd only been in the market for 31 minutes, I think. Anyway, we talked about the red days that Dwayne he just mentioned a few minutes ago. You can see right here when you see the red things, the red rows. Those are days that we didn't get our 2 points and we did not end profitable. Now, most of those days are, the loss that we took. On all but one of those days, the loss that we took was, I don't know, I think this one was -$40 a contract. This one was -$40 a contract, something like that. One of these was -80, another one was -30, one was -10. And there was one that we took, this one here was our worst one of the year. In September was our worst one of the year. I think we're -$210 a contract on that one. But look at all the plus days. All the green days are up days, and on those days we made at least our 2 points. And you can see the monthly totals, plus $7,210 per contract in August, $5,600 in September, $6,400 in October, and so far this month, in the 2 trading days, we are up $300 a contract. All right. Now, let me slide that off. I did go over the 31 minutes. Yeah, I did go over all that. Okay. Let's see. So the trades themselves. Let's start out with crude oil. Okay. Now, crude had some nice movement right here during the break. It was really, well, I can't say it was really congested. It had a nice move in here, and we took a break-even trade here. We missed a nice trade right there. We took a trade right here. We took 10 ticks profit on, and we missed a nice trade here. After that nice move up, it got really congested and sideways in here. We got snagged right at the beginning of it right here. Okay, we took a short trade right there. It stopped us out, and then it just went sideways for a long time. There was another trade in here, and then it went sideways even longer. After the morning session, it started another move up. Now, in this move up, there was a long trade. It hit the BBC right there. Looking left, it hit the BBC right there. You might have gotten long on that right in here. You might not have. You might have waited until over here, this up close over here. It depends. I don't know what that looked like when it was being painted. If that actually did hit the BBC, when it was actually painting the bar, or if it got pulled up after the fact. If the BBC got pulled into the bar after the fact. Anyway, there was a long trade right in here, a long trade right in here, and now it's changing directions. It looks like it's changing directions. There would be a short trade. Well, it didn't pull away from the BBC yet. It's got to pull away from the BBC for us to get a short trade in here, but it does have bearish divergence. You can see these were the trades that we took. We took a long trade on and up close above the trend line. Missed that one. Took one right here, up close above the trend line. Took the long trade. Missed that one. Stopped out on this one, and that was all we did in crude oil this morning. Okay. Let me slide crude oil back to the side, and we'll go to the Russell. We did not end up taking any trades in the Russell this morning. Okay. There was one opportunity right in here, but I missed it. And I don't know why we didn't. The ES was going into a zone during this, I think. That's why we didn't take any trades in there. And you know, the ES is what was preventing us from taking trades all morning on the Russell. You can see it right in here. It pulled down, hit the BBC. Now the ES, I believe the ES was in a zone at that time. So we weren't taking any trades in here. And it needed to get up above that box, which it did not do. Suggests right here when the green line gets up into the cycle down here and you don't show a higher swing, that's topping action. And it did top out, change directions. Started moving down, and the ES was in zones all the way down here, so we couldn't do anything. Change directions on the way up. Now typically this would be a long trade, this would be a long trade, this would be a long trade, and this would be a long trade. But weekly trading zones stopped me from taking those. Weekly trading zones on the ES and weekly trading zones on the Russell. Okay. After that, it got in here. There was this one opportunity right here where the ES was actually below the weekly trading zone finally. It was a down close below this trend line right there. And I tried to enter it, but I didn't get filled, and it did move down. It moved up, you know, a little while later during the break. It moved up back into the zone, and now it's moving back up again. I don't know where the ES is right now, but if it's not going into a weekly trading zone, then there would have been a long trade right here on this up close. Okay. Yeah, you see the ES is going into a weekly trading zone, so I wouldn't have taken this trade right here. Let's see. Gold. Gold. We had a pretty good day on gold. We didn't take a ton of trades, but we did get some profit. All right. The first opportunity on gold was right here. It was an up close off the BBC. Now right here, you don't need to have the trend line. I originally did draw the trend line when it started pulling back. I missed this trade because I was hoping somebody. But the up close right here was the long trade, and that worked out pretty well. I did get in on the next one that was right here. I took 10 ticks profit on that. This one, we didn't have any divergence or anything like that, so there was no way to take this trade. But I drew in this box here, and I said this will be topping action if we don't close up above that box, and we didn't, and it was topping action. You can see it reversed, and there was a shorting opportunity right in here that I missed, and a short trade right here that I did take. I took 6 ticks profit on that one. That was pretty much the end of it for me for gold this morning. Okay, you see how few bars there are in here? That's just unusual. You know, I can fit my whole morning like that in one screen area. That is unusual. All right, so we're going to slide that off, and we'll go to soybeans. All right, on the soybeans this morning, the first opportunity to trade soybeans was this up close right here. I did get long on soybeans there, and I did get stopped out to the tick. I had drawn in these areas up here at 1262, and there's another one up at 1264, I think, that I had drawn in for target areas once we got filled. It got to this one at 1262, and it did not make it up above here. It did not close above this box. I had said if it doesn't close above that box, it's probably going to turn there and change directions. It did change directions, and at the end of the live trading room this morning, I put this trade on this 1257. It actually wasn't 1257, it was 1256.75, but I did put that trade on. And in that trade, I didn't count it toward the live trading room results this morning because I didn't show everybody my DOM and all that stuff. But it did work out, and it's still working out. It's actually down to a point right now where it could give you a second entry. We have bearish divergence. See how the green line got down into the cycle? Whenever you have divergence like that between the green line and the cycle portion of the slingshot, you anticipate that the green line will make it down there to the cycle, and when it gets there, you anticipate that it's going to pull back and give you another opportunity to enter in that trend. Okay. Let's see, on the ES, there were a couple of spots on the ES this morning, and they just didn't work out. The ES, we were waiting for that thing to get through the zones, and when it finally did, it gave a long opportunity right in here, and a short opportunity here. The long didn't work, the short didn't work, and then it gave one more back here. None of them worked on the ES this morning. I don't have an ES DOM open, so I don't typically trade the ES, but the ES was kind of, I don't know, stuffed in a 6-point range around a weekly trading zone. So it was kind of tough to trade today. We didn't trade any copper at all. None. And we looked over here at the euro once. Here, now this was all after the fact. I didn't actually do this in real time. Okay. I noticed that there was an up close right here that pulled back down to the BBC. I'll step off the BBC and moved up. All right. If you had entered on the up close here, I think it would have stopped you out if you had any take stop. But it did end up moving up in the direction that we wanted it to go. All right. Well, with that, I believe I'm going to wrap up the live trading room. Not the live trading room. I'm going to wrap up my recap. All right. If anybody has any questions, or if you haven't taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. If you have taken the free trial with us, and you want to become a partner, then just send us an email at support@cfrn.net. All right. With that, guys, I'm going to wrap it up, and we can head out to Vegas. Okay. We can head out to Vegas. The recording is done. Is that Mike Reed or David that I hear?
Hey, hang on. Somebody just fired up a chainsaw, so my nice window open experience has been... Can you hear that?
Barely. It's okay.
Barely? Oh, my goodness. Yeah. Hang on a minute. I'll be right back.
You can just barely hear it. It's no big deal. I don't know, David. Could you barely hear it? Or Bert? Was that you, Bert? I was making all that noise a minute ago?
No, I have my phone on mute.
Oh, okay. It wasn't me. David's eating lunch. Or breakfast. Breakfast? Yeah, breakfast. It's only... Well, it's 2 hours difference now, right?
Closing the window seems to have helped a little bit.
It really wasn't bad.
It was bad for me.
Okay. All right.
I'm glad it wasn't as bad for you as it was for me. For me, it was pretty bad.
Want your experience to be pleasant. Anyway.
All right. Did you say Mike Reed was with us today?
I thought he was, but I don't think he is. I don't see him in there. No. Nope. And he usually gives a text when he gets in, and I don't see that either. But I think it was just because someone was fumbling around with their microphone, and I thought it was Mike, but I think it might have actually been David, or Bert, or you. I don't know.
Okay, I did leave out, when I was going over to tweets and the whatnots, we also said consider being long gold, the December contract above 13.21, and the swing high on that was 22.40. So, I mean, there was a maximum of $1.40 in there, but I mean, $1 in gold is $100 if you're trading the futures contracts. So I guess I shouldn't slight that by saying, there was only a movement of $1.40, because that was, again, more than enough. So the S&P could have given you your 2-point daily goal, or the beans, or the gold. You could have gotten it from any of those three places. So that's a really nice way to start the week. So if the rest of the week will be as kind to us as the first few hours have been, and for me, Globex open Sunday afternoon, that really is when the week starts for me. I know for many of you, it's the opening bell on Wall Street, 9:30. It's when you take your first look at the market. I'm watching it typically Friday, right into the close, and then I'm kind of right there when it opens on Sunday night. Last night there was no big gaps either way, at least not on the S&P. There may have been in some other markets, but it was kind of quiet. And yen is trading lower to sideways. The bonds, well, we're going to go through all these markets here in a bit. So, so you thought Mike Reeves was there, but now he's not. Okay. All right. Well, with that, then we can just go ahead and head right on out to Las Vegas. Talk to David. Let me go ahead and grab the charts back. Did you take, while you were doing the recap, did you take any trades during the recap?
I did not today.
All right. Let me just make sure I got my charts right. The 30-year bonds, 1 hour. Huh. Oh, mama. All right, I'll go ahead and show you guys. All right, let me grab the charts.
Okay.
As I do. Okay, now remember, these are last week's zones still in play. The carryover effect, as we lovingly call it. Look what happened here on the bonds last night. Now, I didn't put a tweet out on this, but these are the zones from last week. So on Friday, well, going back to Fed Day, we had been locked in this range up here. These are hourly candles. We've been locked in this range from October 23rd, actually the 22nd, from October 22nd, all the way up to October 30th, Fed Day. So basically there was 8 days across here that we were locked in, 8 calendar days, however many trading days there is. And we were hoping that the Fed announcement would, throw enough fuel on the fire to knock us out of this range one way or the other, although it was, pretty comfortable trading from zone to zone, except on some of the days it wasn't making the full trip. It would give you, it would give you the equivalent of 2 points up and back down and back up, but it's hard to trade that when it doesn't get all the way to the zone or almost all the way. Now, remember with dojis, not every doji represents a reversal in the market, but at almost every reversal in the market, you'll find a doji. It's kind of like Weebles wobble, but they don't fall down. You follow me? See this nice doji here? And this is actually considered a doji too. It's more of a shooting star variety, but boom, boom. And then we get the Fed. The Fed does blow us down through this zone only to pop right back in, and I'm like, oh man. But nonetheless, it was good for 14 ticks, back up to the middle of the zone, and then back down to the zone, and then it got good. We broke below. Okay, we did this guy right here. Hey, Mike, my ink started disappearing again.
It did?
Watch. See that?
I did see that.
Oh, that time it stuck. Now, oh, there it went. See it?
Yep.
Okay, so right here, guys, price did this, and then it did this, and it did that. Get out. I give up. No more drawing tools for me. Let me just get out of the drawing mode, normal non-drawing mode. Okay. So price goes down, makes the leg down, it retraces back to the zone for support. So now all we need is for price to start moving south, and then we pick our spot, and then we're going to trade it to the next zone. Every time we arrive at a zone, okay, question is, will the market trade to the zone overhead or the zone below? Doesn't matter which direction it approaches the zone from. Once it connects with the zone, that question is what has to be answered. Are we going to the zone overhead or are we going to the zone below? Once it starts showing you which direction it's headed in, then you can simply use your slingshot or any other methodology that you have to get on board. Now, this particular market pays $31.25 per tick. So even if you get stopped out at break even plus a tick, and that happens to us a lot, we get stopped out at break even plus a tick, you still make $25 per contract on the trade. Now, I know you didn't come to trade to make 25 bucks, but making 25 bucks is certainly better than losing any bucks. So think about that. Think about bonds. Think about the opportunities they represent. Now, the zone to the zone move, that was 18 ticks. This zone to zone move up here was good for 750 bucks. This zone to zone move was good for 562.50. This zone to zone move was good for 437.50. And then last night and this morning, we've had a zone to zone move, 14 ticks, good for 437.50. Now keep in mind, these are last week's weekly trading zones. I haven't switched them over to this week. So what you're seeing here and here is still that carryover effect that I was talking about. Okay, let's see where the Globex Open was last night. November 3rd, right there. That little doji right there, down inside of that zone, that was Globex opening last night. We get that move up, the retracement, and the continuation. Just like I was showing you here, the move, the retracement to the zone where it confirms that it is going to be good resistance, and the move. Down here, the opposite, the move, the pull back into the zone, it confirms it's going to serve as good support, and then the move right up to the zone. Okay? So what's it telling us now based on its behavior? It's telling us that now that it's touched this zone, it's going to try to get back down to this zone. Okay? Now, December, that is still the correct month for the bonds, right, Michael?
Yes. Yes, it is.
Okay. So let's do this. Let's see, if 33.22, let's see. What's the swing low here? The swing low here is 133.30. 33.28. So let's say 133.28. 133.28. Okay. You might consider being short below 133.28. That's 6 ticks down to the zone below. Do you have to wait to 28? Let's see, 28's actually here. Boy, 27 actually looks even better because you get below the low of these lows here. I know that seems like a long way, and you're probably going, well, shoot, there's a whole trade in between here and there. Yeah. And you know what? If your slingshot sets up and you want to get short from here to 27, that's awesome. I'm just saying that the trade I see here, the one with the least, like if we get this far to 27, I've got no obstacles to prevent us really from getting on down to 22. Now, if that happens, that plays out, 31.25 times 5 ticks, that's $156 per contract. So, in fact, I'll even go on the record with that one, and we'll see how it plays out over the course of this radio program. So, all right, Michael, we're all done. Officially headed to Vegas?
Yes, officially headed to Vegas.
Official. All right, guys, we're going to pause for a brief station identification. We'll be right back with Mr. David Williams from PageTrader.com. Boy.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
I think Good morning, Dwayne.
David, good morning. Welcome to the show. How are you?
Thank you very much. I'm good, Dwayne. Thank you very much. Michael, how are you today?
I am well.
That's fantastic.
Yes.
No, go ahead and answer. Don't you love when people do that?
Okay.
They don't even hear your answer, and they tell you that's fantastic.
Thanks. Yeah. Thanks for asking.
Oh, you're welcome. And I hope everyone... no, I was really asking. I really was.
Oh, okay.
I
believe you.
I care. I'd like to know that you had a nice weekend.
Yes, I did have a nice weekend.
Even if you are from another planet and have a spaceship in your backyard that's made out of some kind of strange metal.
Time travel.
Whatever. Time travel.
Yeah, that's what I did this weekend.
So apparently this Cohen and SAC, SAC to pay $1.8 billion in penalties. Are you guys familiar with this story? I'm just seeing some headlines, which they appear to be breaking headlines. I don't know.
No. I don't know anything about it.
Criminal case. What? No, thank you. The criminal case against the hedge fund SAC Capital Advisors has reached a conclusion. People briefed on the matter with the government expected to announce Monday today. Oh, this was written yesterday. That SAC will plead guilty to insider trading and pay a fine of roughly $1.2 billion. But the plea deal will hardly remove SAC and its owner, the billionaire money manager Stephen Cohen, from the legal spotlight. For one thing, the people said the agreement does not resolve a separate civil lawsuit that the SEC brought against Mr. Cohen in July, accusing him of failing to supervise his employees. 6 former SAC traders have pleaded guilty to insider trading crimes. Okay. Now, I was aware of this on the periphery of what was going on in my life, that there was this thing going on out here. In recent weeks, people said the FBI have been poring over SAC's trading records and increasingly pursuing the cooperation of potential witnesses. With the help of one person who is now cooperating, authorities have scrutinized SAC trading in shares of Gymboree, the children's clothing and music chain. Okay, so $1.2 billion. That's a pretty hefty fine. But are they out of business? U.S. Attorney about to hold news conference on SAC capital settlement. So, all right. Well, anyway, I was just I saw it flash on my screen, and I just wondered if you guys were at all familiar with it or not. And since you aren't, and I'm not really up to speed on it, does anyone in the audience have anything they want to share? No? Okay. All righty then. Well, moving right along.
Looking like it.
All right, so what did you do this weekend, Dave?
Well, I did meet with somebody this weekend who I've put this offer out there before, that if people come to Las Vegas, they can give me a call. We'll get together for either a dinner or just whatever you'd like. And we did do that. Excuse me. This is a particular of interest because this fellow is very deeply involved in the soybean industry, in the production side of soybeans, the distribution of soybeans, and so on. And so it was interesting to hear, like as an example, the Asians particularly like Midwest American soybeans. Okay. They're not so crazy about soybeans that they grow and that some others grow, but they really like the flavor and whatever other qualities, you know, that they detect in Midwest grown soybeans, which I would have never guessed that. I would have never thought that Asians view our soybeans a little bit as a delicacy or whatever you want to call it, that they have a preference for Midwest grown soybeans as opposed to grown elsewhere, wherever elsewhere is. But they do. And so there's a whole industry for you know, selling these soybeans to Asians, and soybeans will last quite some time. They're not really, you really have about a full year from the time that you've actually harvested soybeans. If you keep them cool and dry, they'll easily last a full year, and they're even good after that year, but they start to lose some of their flavor and their plumpness, you know, so to speak. That sort of, over time, that would just happen. But that's pretty amazing that you have, here's something you can eat a year later. an orange, as an example, won't last a year. An apple won't last a year. We could go on and on with things that don't last a year that are right out of the ground. But the soybeans do, and they can be put into a silo or packaged in some way where they move cool air across them, and they last. So anyway, they ship them. They have interesting ways of getting the soybeans through these various distribution models all the way out to Asia. And it was just interesting to hear the physical side of the business, because all of us are involved in the non-physical. Most of us are, we're buying and selling these commodities with no intention of owning them, taking delivery of them, and so on. And here's a person who's really deeply involved in the growth, production side, and distribution of the soybeans, and to hear what goes on that side and what kind of things they have to deal with, and the problems and the good sides and all that. Well, one of the good sides is that a lot of Asians really like our soybeans from America, which is nice to hear. So we've got something in our soil, or maybe they're just grown better. I don't know. And they're also, the GMO thing. There's a lot of people that don't want to eat. They want to eat food that isn't GMO, so genetically modified food. Mm-hmm. And I think the Asians may fall into that category, although I'm not 100% sure. But this company
Some
that he
countries
works
won't
for,
even allow GMO products to be shipped into their country.
Mm-hmm. Well, anyway, so I spent some time with him, and that was interesting to hear about that, see what we've done in the soybean world here with our Midwest farms. So, farmers don't have to grow the same crop every year. It may seem obvious, but a lot of times they'll grow soybeans for a couple of years, then they switch out and grow corn, as an example. They try to go where the action is and where they can get their better return and so on. So it was just interesting to hear about it all.
We just had our second trade in the new contract, the ZSF4. The first trade was a little rocky, but the second one went off beautifully. We had a 4-cent gain in that one. And last year we had traded the November soybeans very well, and then they kind of fell off our radar screen. We weren't seeing a lot of opportunities. And then this year we came back, we did November soybeans again, and guys, you can go through the Twitter timeline and you just see, boom, boom, boom. It was excellent, excellent trading. And so we made a commitment that this year we would not allow soybeans to fall off of our radar screen, that no matter what results we end up with, that we would see it through, that we would continue to look for opportunities. And we're not going to put on trades just to put on a trade, but as we see opportunities present themselves, we're going to stay on top of it to see if soybeans cannot become a year-round trading vehicle for us. And we said that at the end of the one-year study, if our results show that we just do far better, with the November contract than we do the others, then we might say, okay, we're going to just trade November soybeans. We'll let the other contracts pass us by. There's plenty of other markets to trade. So we're 2 trades into our experiment with the new contract, and I like the way it's shaping up. I think we're going to be able to do just fine with this new contract, and I can't speak for the others yet. And again, we're only 2 trades into this one, but so far, so good. Now, David, your soybean product, it used to be a separate product, then you rolled it all in together with your Messenger Pro, but you do issue soybean signals year-round, correct?
We do. I haven't I haven't made the observation yet that a particular month has been particularly good for us or not, but it may well be the case. That is the case. But we just look at the market and see if we can see the high probability trading setup that we need to see in order to take a trade. And I think there is probably something to the volatility in soybeans that picks up later in the year because harvest time and so on. And that may indeed make trading, and probably does make trading, a whole lot better. Just like recently in all these markets with the volatility being bigger. That's a very powerful, for people who know what they're doing with markets, volatility is a very powerful incentive to trade, but it also sets up much larger moves, much larger payoffs. The risks become larger as well, but if you know how to manage yourself, your psychology, your trade, and everything, it works very much in your favor. So maybe, perhaps, I'm just suggesting this, maybe what you're seeing is that there's an increase in volatility and, in a sense, therefore predictability in the November beans, perhaps, due to fundamentals, harvest, and so on that happens later in the year, you know.
Okay.
Yeah, just a thought, just a suggestion or a thought on it.
All right. Okay. Anything else you want to talk about?
Well, a couple things. You remember the government bailed out General Motors, and General Motors came back with a real bang. And there's no question they're doing very well. Most of the car companies are doing very well right now, but GM is the one that we put in an awful lot of money, like $63 billion, something like that. And wouldn't it be, I mean, doesn't it seem pretty obvious that since GM did so well, and don't you remember hearing that they paid their loan back and, you know, stuff like that, or they had paid most of it back, but there was some confusion there. But in the end, as hard as it is to believe, the government still lost $10 billion on the loan to GM. They lost $10 billion because somewhere along the way, and maybe somebody can correct me, straighten out the facts of it, but somehow their ability to get paid back is directly tied to the stock price. And the stock price would have to be 5 times what it is now, some number, big number, in order for that $10 billion to be paid back in full. And instead, here's my point. When it's not your money, you can mess up even a home run. GM was a home run. They lent them money. GM has blown it out of the park, and the government still walks away losing $10 billion on that deal. If you can't win the GM deal, what deal can you win? The only other deal that they did win that I'm aware of is the Tesla deal, where Tesla walked up and said, well, we're going to pay you back in full. Here's your $456 million. See ya. And even that they may have messed up, but it's unfortunate that they had to lose $10 billion because that's not their money. That's everyone else. That's $10 billion of taxpayer money that somehow they managed to lose, even though GM has done record profits and record, car sales and so on. I don't know. What is it with the government that they just can't get anything right, even when it's 100% right? They got it right, and they still lose $10 billion. And that's because it's tied to the stock value, and the stock would have to be 5, 6 times higher or whatever. I don't know. Hope the healthcare thing works out okay, since they can't seem to get it right even with the other. There's been a lot of stuff over the weekend about that as well. We don't have to go into all of it. We've ground that into the ground. But shouldn't there be isn't there some consequence to somebody in the government making a promise to millions and millions of people? If I had read that in an ad, if I had seen a print ad that said, if you do these things, give me your money, give me your vote, I promise you this. And if it was that promise, wouldn't regulatory agencies be coming in and saying, well, that's actually deceptive marketing, or that's deceptive advertising? And wouldn't you be in court? Wouldn't you be in some kind of trouble for that? And it's often the Democrats that want more regulation in the markets, is it not? It's often the far left that wants more and more regulation of everything. They want to control everything. They love freedom, but only when it's their kind of freedom, the kind of freedom that has them in control of everything, like your health.
Freedom's just another word for nothing left to lose.
That's right. Very well said. That's almost poetic. In fact, that comes from a song. You stole that. No. Anyway, so in the end, they're the ones that want all this regulation. And yet when the president comes out with a line that's repeated 24 times that promises something, And there's no consequence. Where's the consequence to that? Is it just a political consequence? If I was in business and did something like that, I'd be in court. I'd be in trouble. So would you, and so would anybody else. And people routinely are. But why is it when the government presents something, the president himself, there seems to be no consequence other than perhaps political? I wonder why that is. Where's the regulatory body for a fraudulent claim being made to the American people? What is that? Or is it impeachment? I don't know. It just seems odd to me that same kind of claim would have gotten all of us in all kinds of trouble had it been something we were promoting that didn't work out, not only just for a few people, which sometimes you can get in trouble for, but this is millions and millions and millions of people. It's an incredible thing that we're watching take place here, and how is he going to handle what is his real response going to be to all this? And I think one of his responses is it's only 5%. Well, that's about 15 million people. And wasn't the whole purpose of his plan to get 15 million people insurance? People who couldn't afford it or for whatever reason. That was the 15 million. Well, that was so important to him to get those 15 million people insurance, but now it's just 15 million people when they have his promises broken to them. Well, that's just 5%.
Well,
that's just 15
I think
million.
there's an old saying that says that once you're up to your rear end and alligators, it's hard to remember that the initial plan was simply to drain the swamp.
Okay.
Yeah. That's right. Oh, I don't know why that little bit of poetic justice suddenly came to mind, but I think we all understand what that means. They use more colorful language, they being,
Yeah.
they. But when you're up to your keister in, that might not be good either, in alligators, it's hard to remember that the original plan was simply to drain the swamp. So in other words, all the man wanted to do was to give everybody affordable health care, and look at what a nightmare it's turned into.
Yeah.
I mean, let's just say that the intent was honorable. Okay, Hillary tried it, didn't work, and so the current president came along and tried to pick up, and carry forward with the, let's call it a noble idea that all people shall have quality and affordable health care. That noble idea, boy, it has just turned into a swamp full of alligators. Backing up for a moment, before we get too far off the beaten path, you had mentioned soybeans, and I missed a flurry of comments that came in. Was there anything else you want to add on the healthcare front?
Oh, I was just going to say simply that it may well, it sound noble. I think it's a little more sinister than it actually sounds. I think in order for this program to work, it would never, here's a good way of putting it, the program would never, under any conditions, work if it were true that you could keep your health care. The program has no chance of succeeding if those 15 million people or more could, in fact, keep their health care. So we know that he knew that because it was cooked right into the law that in order to get those people who they need to spend double on their insurance, people who are already responsible, have their own insurance, and so on, there's no way the whole plan would have worked unless those people lost their insurance. And they knew that. The numbers don't work unless you have those 15 million people.
I posted a funny in regards to that. Let me show you guys. You're going to love this. It's pretty funny. Well, some of you aren't. Some of you are going to be pretty offended, I think. But,
well, this is beyond being offended and not with health care. This is a fact that, we didn't get told.
All right, can you see my screen?
Yep.
Remember when Nancy Pelosi said we need to pass it to see what's in it? That's the definition of a stool sample. Well, apparently you didn't find it as funny as I did.
Well, it's good political cartoon.
Oh, it's really good. Anyway, and there's Man in Funny Hats. I didn't have a better caption for that. I have no words for this. Nice hat. My son was in his first marching band parade this weekend. He did a fine job. let me just say. And and these two guys, I don't know what they represent or what the hats are about, but they were in the parade, and so I felt obliged to snap their photo. All right, now to the soybean questions. Okay, now that we know that the health care bill is nothing more than a stool sample, now that we've solved that, okay, Kyle wants to know, are you talking about the little nano soybeans or the grade 1 yellow soybeans?
Well, I think I'm talking about the soybeans that we're trading, the ordinary, not nano, but the ordinary soybeans that are harvested each year by regular farmers. I'm not aware that what we're talking about is anything but that.
Okay.
I'm not even aware what a nano soybean is.
I don't know beans about beans, quite frankly. We trade them, and we had a nice, trade overnight on the beans. But beyond that, and you might even, that sounds kind of interesting, nano soybeans. Kyle, maybe you can type in a little information and share with us what that is. The next question, or the next comment from Richard, Hinko Man soy sauce in Walworth, Wisconsin. Massive tanks of soy juice. I don't know what that means.
I think he's saying that that is a company that utilizes a tremendous amount of soybeans to make that soy sauce, and they have massive tanks that somehow soybeans are like a product that you could build a rocket ship out of soybeans and send it to the moon. Soybeans can be used for anything.
Yeah, right. They can be used for an awful lot.
Remember the movie Soylent Green from millions of years ago? It's a movie, for those of you that don't remember, it's a movie where there was a society living and they had this special food called Soylent Green. And in the end of the movie, some investigators trying to find out what the food process is, how do they make it, and in the end it turns out that it's people. And so you see the guy running in the street near the end, and he's saying, Soylent Green, it's people. Oh, it's a great classic movie.
I did see that movie years ago, but I did not remember how it turned out. So, All right. Dirt lasts longer than soybeans. That's from Gary.
Well, dirt probably does last longer than soybeans, and that's why people sometimes like to own dirt, because it doesn't go anywhere. It stays around for quite some period of time. That's called land.
Kyle says that he already had typed in more information. The nano soybeans are more of a sprouting type versus the number 1 yellows that are used for oil and meal. And then Kyle also says, usually farmers rotate corn, beans. It has to do with bugs, parasites, and nematode cycles. There's a guy that knows his beans. And then Homer, who seems to know just a lot about a lot. David, the crops must be rotated to save the dirt. This is why the farmers kept moving west, because the dirt just died. By planting corn a couple years, then plant beans for a couple years, and the farm will last forever if you take care of the dirt.
Wow. See, now that's really that's brilliant to know, because the dirt has quality. Dirt has qualities to it, and the qualities have to be maintained in order to grow plants well. And I hadn't even given that any consideration. So that's good stuff. So they're doing this to keep the dirt healthy, the soil healthy. Sounds better to call it soil than dirt, but dirt's what you sweep off the floor in your living room or whatever. Soil is what you grow things in.
Yeah.
But thank you, Homer,
Let's
for that.
see. Now this comes from Karen. H.L. Mencken, born 1880, died 1956, was a journalist, satirist, critic, and Democrat. He wrote this editorial while working for the Baltimore Evening Sun, which appeared in the July 26, 1920 edition. Okay, we're going back to 1920, guys. As democracy is perfected, the office of the president represents more and more closely the inner soul of the people. On some great and glorious day, the plain folks of the land will reach their heart's desire at last, and the White House will be occupied by a downright fool and complete narcissistic moron. H.L. Mencken, the Baltimore Evening Sun, July 26th, 1920.
Wow.
And Karen ends her comment with, and so it was written, and so it has come to pass.
Oh,
So,
wow. Well, that was, she's just quoting, so
yep.
she's simply making a quote from something that somebody said. But,
a long time ago, almost 100 years ago.
Yeah, being a big part of our economy, I just want to say one last thing. Then I promise I won't say any more. It was the left that was so complaining about Walmart. And why were they complaining about Walmart? Because Walmart wouldn't allow people to get past 40 hours, and those people couldn't get insurance through their company.
Right.
And that really upset lots of people. Walmart's just a company. They choose to do business the way they do it. That's the way they decided to do it. Now, through their leader, millions of companies are no longer going to be offering health care. They're going to be cutting their hours down. They've already come out in mass saying that. So if you didn't like Walmart, now it's the whole country. How you doing? It's the whole frickin' country is going to have 30-hour weeks, 35-hour weeks. You're not going to see any of that. You're going to see a lot less of people having insurance because of the mess that this is. And like I said before, and I just want to repeat again, there's no way the administration didn't know that this was going to happen. They knew full well. It was in the Federal Register itself, which is a paper that comes out. The Federal Register indicated that there could be as many as 90 million people in the end that lose their insurance. They didn't lose their insurance because insurance companies decided on their own to cancel them. The insurance companies are forced to cancel them because their policies are illegal. So when somebody tells you, oh, that's just the insurance companies, Obama doesn't want that. No, he made their policies illegal. That's why they're canceling them. And the big grandfathered policies, hey, you're grandfathered in? Fantastic. It's a really, really narrow grandfathering that he didn't care to bother. You have to pass the bill in order to see what's in it. If they make any slight little change in your policy, any excuse will do, and you're no longer grandfathered. So we're just cattle, and we're just all going to be forced into whatever the program is. But in the end, isn't it going to be interesting to see what the number really is? Again, this whole program was about getting 15 million people insured. It was worth everything to him to do that. Now, when 15 million people are going to lose their insurance because of his plan, he just writes off that same number as that's just 5%. Majority of it's just a little 5% thing. But that same 5% is what your whole purpose of your program was for. So it does seem a little odd to me that 15 million people are going to lose their insurance and have to pay double for it, and now 15 million people are going to get the benefit of those people now paying double. It's a big kind of Ponzi-ish kind of thing where the people who have are going to pay for the people who don't. And I think we would have been wiser in the end just saying there's 15 million people that aren't insured. Anyone with any conscience wants everybody to have health insurance. I would be very happy to pay my fair share, as long as it's really fair, and don't use that term against me or anyone else, but I'd be willing to pay more to help insure the 15 million that aren't insured. But he didn't do that. He just completely redid the entire industry, and there's going to be fallout from this for years and years and years, and you know it is not going to end well. Unless you are a complete lunatic dreamer, like much of our administration is, where they don't know reality. They only know their vision for humanity. They want to help people. Let's see how many people this helps. We'll see how many people you've helped in the end here. The road to hell is paved with this administration. Thank you very much. That's my show. Good night.
Okay. Thanks for sharing that.
Yeah, that's how I feel. Obviously.
Obviously. All right.
Well, do you want to move on to the S&P or take a quick look at some of these markets here? Let's do that.
Yeah.
Don't get me all wound up on this silly healthcare. Okay, well, let's take a look. S&P 500. we've had just an incredible 5 years. For those of you that have the ability to look at a yearly chart, which apparently many platforms don't allow you to do that for whatever reason, but we've had an incredible 5 years. The first year was January, or it was 09 at the bottom when we put in the Antichrist low. That's the 666 low. And we've gone up, inclusive of that year of 09, a total of 5 years. And I've mentioned on the program before that Reflected Wave is calling for 2014 to be the next yearly top. And we've certainly broken out above levels that just about any technician would have been difficult to get above. And those are those 1586 level and slightly lower. And they've moved through it, and we're almost certainly going to close the year very well. But having said that, we do now have to respond, or the market has to respond to a shorter-term negative force. There's yin and yang, in the markets. It has to respond to that force for a number of weeks, normally on the downside, sideways to lower for several weeks. And this was also Reflected Wave. This was the October 28th weekly top, which came 1 week late. So our outlook is that we believe that the market is going to continue to go sideways to lower, and there is actually some indications, although I'm not going to give them out on the radio right here, but you're welcome to come listen to them in our Williams Edge product if you want to. But just with due respect to the people that do take the trouble to do that, there are some indications for some numbers below us that may be of interest to many of you that might want to take advantage of the position that the market's in right now, having made the October 28th top and so on. We're in an unusual market. The market really has shown incredible strength in the face of all kinds of news. I'm not just talking about recently. I'm talking about in the last 5 years. Think of, this is the entire presidency. Now, a person can say, well, the market really likes this president. I mean, I don't know, I'm not a news person, but I don't think I could disagree with that. The market's gone up, straight up, for 5 years. Not only has it done that, it's
this chart goes all the way back to September 11th. This is a monthly chart. And, here you go.
Okay.
Straight up.
Yeah, it's been straight up, and on a yearly chart, it's just 5 years of up. So this market has either liked the administration, which I'm willing to give it. Let's just say that's what it is. It likes it for whatever reason, and likes it so much that in the face of all the bad news, all the uncertainty, all of the economic malaise, the Benghazi, the IRS, the NASA, the list just goes on and on. The hearings, everything. All through that, the market has been rallying, and the pullbacks have been relatively minor, and certainly minor considering the scale of this move. And here we are, just near all-time highs in this market. It's really been an incredible run. So if things get good, kind of seems like the market would want to go down then, wouldn't it? Because it sure loves bad.
Yeah.
It sure seems to love bad. Bad is the new good for this market. So anyway, we're up at near all-time new highs. We believe that there's a multi-week reversal, likely continuing down at least until the week of November 18th. I think November may have 5 weeks to it. So I like the idea for people that are, maybe trading on any level, short-term or overnight or swing trading and what have you. But I like the idea of considering that we're going to be going sideways into, the third, fourth week, whatever, the week of November 18th, which I think it might be the fourth week. Somebody will have to correct me if I'm wrong here. I don't have my calendar in front of me. 1, 2, 3. Yeah, that'll be the fourth week. So now, having said that, it's really a good idea for you to know what you're doing if you're going to trade in the S&P itself, especially not just the short term where you're in and out quickly, but if you're going to be staying with it and holding positions for larger targets, which means, of course, that you are not going to kid yourself, fool yourself, dream yourself, unreality yourself into believing that you can get away with it without stops for long without it hurting you. The same way that our administration has dreamed and unrealitied itself into a position to believe that this healthcare is something that is going to help a lot of people. Wonderful idea, just really, really bad implementation because none of these people have any experience doing any of it. So I hope you have some experience if you're going to take advantage of this. But that's our outlook on the S&P. Multi-week decline, likely into the later this month, November 18th, week of, and we're going to try to put together as many reasonable high risk, no, not high risk, high probability, low risk trades. We're going to put together as many high risk trades as we can. And there are people who look for those high risk trades, and there usually is a very big return, can be, for high risk trading. But it'll wear you out, and you will be at your 50th birthday party in a wheelchair, in a mobile home, next to a assisted living care center somewhere, if you're going to trade that way, because that wears people out. So don't do that. Anyway, that's my outlook on the S&P. Let's go real short term now. If you want to, we can talk a little bit about. We had a very nice, if I may say so, setup last week for people in the Williams Edge product to go short. This was actually the week of October 21st. It was a forecast that the market would continue up to 1768. It would reach that on the week of October 28th, and it would fail there, and it would go down to 1746, and it would touch 1746 on Monday, November 4th, plus or minus a day. And the market did get up to 1768. It did go down to 1746. It actually got to 1747 on Friday. That's the minus 1 day, and that was the bottom. So the bottom was, for normal purposes, is plus or minus 1 unit of time, and they're bouncing now off that. What I do not expect to see is the market to have sustainable new highs. I believe that the force that's at work sideways to lower needs to express itself and get that out of the way into later November before we will see sustainable new highs. So that's my outlook.
As Keith has just pointed out, we have to remember that a lot of this that we're seeing has to do with the Fed's action and the $80 billion a month.
There's no doubt he's 100% correct.
Pumped into this thing. Now, we were on a string of putting in higher highs day after day after day. And now today's Monday, Friday, Thursday. Last Wednesday, we had a new all-time historic intraday high, but not a new closing high. That was the first day that we didn't have a new closing high. Well, here's one, okay, and then you got to go back to here to find another one, okay. But then we did have an intraday high. Now we go to this day, which would be last Thursday. We did not have an intraday high or a new closing high the same Friday, and it appeared apparently today. So, I mean, these are daily candles, and we've gone from 1640 was the low put in October 9th to a swing high at 73 and a quarter put in on October 30th. So from October the 9th to October 30th, declined from 1640 to, let's call it, from 1640 to 1770. It's 130 S&P points over a period of roughly 3 weeks. So some would call that overextended, overbought, any number of things. You can call it what you want, but this thing has shown its ability to sort of defy gravity for quite some time. As you said, you've been climbing for 5 years in the face of all kinds of bad news. But there have been some retracements. There have been some pullbacks. There's one right here in the S&P where from the low that was put in August 28th to the high that was put in on September 19th, we actually had a pretty decent retracement of that leg. I mean, it overshot the 62% retracement, but turned itself around in a little 3-day pattern we already talked about today, and then sent us up to these now, again, new all-time historic highs. And so there would have seemed to be, a need here in the market to have some type of retracement, some type of cooling off, some rest, some relaxation. This thing, the longer it extends itself without a deep and meaningful pullback or retracement, then I think the more dramatic and painful that it's going to be for all those involved when it happens. We got a new Fed chief coming in. We've heard that she is going to be as flexible, if not even more flexible, with the money supply than Ben Bernanke. We've got the end of the year coming where folks do all sorts of things to adjust their portfolios and fund managers, etc. They've got to get their books squared away because for many, their yearly bonuses reflect, you know, not so much what happened in January or March or July, but where that number is when the year closes for them December 31st. So all you can, if you try to weigh all of that and make some kind of a rational observation as to, you know, what should happen in the market, good luck with that. You simply have to approach each day, each moment as unique in the market and trade whatever's in front of you based upon whatever it is that you understand about the market. That old saying about, well, it's different this time, yeah, I don't want to use that term, but I think we all know that it's different this time. So is there anything else you want to add on the S&P?
No, that's my outlook on the S&P for right now.
All right, guys, we're looking for a move here back up to 62.63. It appears the move is underway off of the number we put out last night for you guys to trade off of, which was 17.57. We had an initial 3 3/4 point move. It went to our target in the first hour, 2-point target without a problem. Came back to test, ran for 6, and now it's underway again. So it may be, you know, if you want to take 60 to 62, that's okay. We're at 59.5, so if you want to go 60 to 62, that's doable. I don't see us going above 62 today, but I'm not going to rule it out because if there's one thing the last couple of years have taught me is that anything is possible. So what market you want to go to? Gold?
Sure. Let's take a quick look. We've got a lot of interesting things going on, and again, the details that I'm unable to give out, you're more than welcome to come take a trial of our Williams Edge product, which allows you 2 weeks to come in and get everything that we're doing, see the full setups and so on. And with this volatility, if I may say so, this is a really good set of markets that we're about to look at that have a lot of indications that are about to come to fruition. So if this is your cup of tea, check it out. You can give us a call. Our phone number is 888-231-4702. Now, with regard to gold, we recently, just a couple weeks ago, forecast that the week of October 28th would mark a top, and the market would decline from that top down to the 1315 level. So, you know, if you go to a weekly chart, this was something we gave out on the week of October 21st. We made a high on the next week after that at basically 1360, and we made a low last week of 1305. So that decline, which is about 45 points or so for the forecast, is a decent move in gold. Not that you would collect and gain all of that move, but as a setup for a trade, that's pretty sizable move, and it all happened in a single week. The question now is the market in a position to firm up here, because we did not close last week badly. We closed right at 1315.5. Isn't that something? So that's neutral. That means that we don't know, and we're going to have to wait a little longer here. But I will give you something that I think will be of help to some of you that may want to work with gold, which is that I believe under normal conditions that we will see a second test of 1305, 1306 tomorrow. Not today, but tomorrow. And I'm going to use how the market handles that test to make my judgment about whether or not we need further down, or if we can, in fact, do something with this market. Now, that's something that I normally would not give out because that's a specific indication to Williams Edge, but that's an example. I want to show you kind of an example of what we do, and we have certain things we're looking for that help, that not only are forecasts, but they also help us judge what the higher probability for the market would be from that point forward. Like as an example, if the market does in fact go down tomorrow, because it's all theoretical until it's actual, and if it does go down and complete that and test that and were to close above those levels, 1305, well, then we can do a lot with that. We can also know certain things if the market completely just disregards the need to do that and doesn't do it at all. That'll tell us something. Another thing that could happen is they could go down and break it and just continue on lower, and that, of course, would leave us in a position where we're more bearish than bullish, and so on. So this is one of the things that I like to do to help set up probabilities in a trade, is to have smaller, shorter-term forecasts and let the market play those out, and that lays out for me the apparently for me it lays out the probabilities for the larger trade being in one direction or another, and so on. So we're really kind of using the shorter term in a sense to help confirm a possibility for the longer term. So keep that in mind into tomorrow, because I think that's an important period. The whole remaining year, obviously 2 more months, is very important. The market's going to get itself set into positions for next year because the year is going to close out and all that. There's a lot of things related to that. So that's our outlook on gold right now. The initial forecast for the move down to 1315 is out of the way. They're sitting trading at 1315 right now, and we are looking for further test of the 1305 into tomorrow, and we'll see how that plays out. That will help us perhaps put a trade into play. Beyond that, we can go to the bond market, and I actually appreciate, was it Keith that said one of the reasons the stock market is up so profoundly, that the stock market doesn't necessarily like bad news. What the stock market likes, from Keith, is they're putting $80 billion a month into Treasury bonds. And so what is that? Why is that important? And that's important because by buying Treasury bonds and, you know, quote unquote, propping the market up, the bond market, 30-year Treasury bond market up, that means that the return on bonds is very low. In other words, the interest rate is very low. And with the interest rate low, money is not going to sit in banks waiting for a 90-day T-bill to come to fruition, when it practically will cost you money to have it there. People are going to put their money in something else. And so Keith's argument, I think, is spot on. That's exactly what has happened over the last 5 years, is that the government has been pumping an enormous amount of money. Now, one thing I will say, that pumping this money into the bonds is not the same as pumping it into a GM and losing $10 billion. Even though GM got it completely right and hit it out of the park, somehow our government still needs to lose $10 billion on the deal. They just cannot get it right. But having said that, by pumping the money into the T-bonds, it doesn't necessarily mean that's a waste of money. It's not necessarily like they are buying futures and may come out with a loss. They're buying T-bonds. They're actually buying bonds. And they can turn those bonds in at some point. And so that money isn't, if you were going to look at something as an investment, at least as far as I understand, that's not the same thing as investing or betting on a company like they did with a bunch of the green companies and so on. So it's not going to be as big a waste. I think it's, you know, it's part of the whole business of governments to do this. I'm not in favor of it myself, but you know, that's more philosophical, and the actual is what Keith said, which is, you know what, with the bond interest rate this low, where are people going to go? They're going to go to stocks, and they've done nothing but that for 5 years. It's been so good that in spite of the bad news, that's the presentation he's making, in spite of the bad news, not because of it, because buying those bonds has reduced the return so dramatically, money has just rushed into stocks for 5 years. Come hell or high water, we don't care about the bad news. There's no other place to put our money. And I think that's what he said, and I think he's right on. So that is what has happened. Now, having said that, We're also interested in the bond market as a tradable like we all are, and I believe at this point, I think it's fair to say that we are interested in potentially putting a long position together. We have a setup occurring in Williams Edge for that. Just a few days back, back on October 29th, we had a trade sent out, which was that the bonds would decline from 135.08 at the time they were trading there, and they would decline to 133.31, which is a nice move. It's about a, I don't know, $1,200 per contract move, and all that would happen into November 1st. So the trade was given out on the 29th of October. That's 3 trading days later. They would be at 133.31, and they were. And so because of that completion and because of some other factors, we're close to thinking that we can do something with the bonds here and on the long side. But we're not in it just yet. But we're in it to win it. I've heard people say that before.
That's
do.
Like
people say that when they, those same people like wear baseball caps a lot and stuff like that. I'm in it to win it. Okay. Let's go past the bonds real quick.
One moment on the bonds, guys. We put a trade out here at the beginning of the show to consider being short below 33.27 down to 33.22, and again, we're still working here off of last week's zones. The question was, if it looked good up here, why not just get in? And the reason we're seeing it right here, these lows were areas of support. Look what happened. Price came right down to that area of support, which is marked by these lows, and it did what markets do. Buyers saw that as an opportunity. They came in, they bid it up. Now, is it enough to take it back to 134.05? Don't know. What we're going to do is we're going to patiently wait for those buyers to either exhaust themselves and or take their profits. Because remember, for markets to fall takes no financial commitment. All that has to happen is people stop buying and prices come down. This move up required financial commitment. People had to step up, put their money down. So we'll be patient. We'll watch. This will remain, this tweet, this alert I sent out will remain valid until triggered. And if it's not triggered, if we get back up into this 0507, then what I'm going to do is I'm going to send out a follow-up alert, which will be getting us long somewhere around the 134.11 area, but don't act on that yet. Wait until you get the alert, and we'll go from there. But for now, the remainder of the show, the after show, and the remainder of today's session, this will be good. Globex tonight, until you hear different, keep your eye on this 133.27. We'll see if we can't pull a nickel out. And a nickel in the bonds is pretty good. It's 31.25 per tick. So that's a $150 move per contract. And depending upon the number of contracts that you trade, and it should be the number that you've earned the right to trade. I can't say that enough times. Just because you retire or sell your business and you decide you're going to be a futures trader, you have some success early on, don't just go trade 10 contracts because you have the money, okay? Because if you do, then soon you won't have the money. There's all sorts of things that kick into gear when you go live. I mean, you're a smart guy, you did a great job in your previous business, there's no reason that success should not carry over and follow you. I mean, success seeks you out wherever you go. Everything you lay your hand to just seems to work out. Well, meet the futures market, okay? Don't. There's no reason, okay, to just step in and start trading a large number of contracts. That may be your ultimate goal, and you can work and we have a plan that will help you work your way from the simulator to that first live contract up to as many as you want to trade. And in most markets, you can trade an awful lot. I mean, there are some thinly traded markets, but here in the treasuries and in the S&P and most of the markets that we deal with, crude, and you don't ever have to worry about you're going to trade too many contracts and throw the market out of whack. You know, if you have that problem, call me. I want to have coffee with you. But watch this number, watch this area, and think about the possibilities of a market that pays you $31.25 per tick. Now, that pendulum swings both ways. If you're on the wrong side of the trade, it's going to cost you $31.25 per tick. But at such a high per tick value, if you're stopped out of your trade at break even plus a tick, you still, after commissions, if you're a partner and you're paying $5.80 round turn, well, you still made $25 on the trade. I know you didn't get out of bed to make 25 bucks today, but making 25 bucks is better than losing any sum of money. So if you've not traded the treasuries in the past, I mean, we've only been looking at them ourselves for the last few months. We do the zones for them now. We're actively working with them. We trade them on the overnight session, on the Globex. So if you've not looked at them before as something to add to your toolbox, I suggest that you take a look at them and see if it might not fit you, your personality, your risk profile, your account size, all of those things. And you can call and talk to Bert, even if you're not a client. Bert will still sit down and have a chat with you, toll-free, 866-928-3310. He understands not only our methodology, but David's methodology as well, or to some degree. I mean, he works with David. And so you can call Bert, say, I heard about you on the radio show, that you're a good guy, and you'll give me some unbiased advice. He will. 866-928-3310, and he really does know what he's talking about. He and Leslie both are more than qualified to have that conversation with you, because they're not only brokers and licensed to give you that type of information, but they trade as well. They know what it means to have skin in the game. So when you call that toll-free number, you're not just talking to somebody that got hired yesterday and they slapped a name plate on their chest, which should probably in most cases say sales associate, all right? But call them, talk to them. I heard about you guys on the radio show. Dwayne and David both speak very highly of you. I've already got a broker. I'm not looking to change. I'm very happy, but I got a question. And then let Bert just chat with you for a little bit. I think you'll come away from that call impressed and well informed, okay? And with that, we'll move to the next market. David, what do you got?
Well, we're looking, of course, at both the euro and the dollar. We do have some setups, so I can't go into details, but there are some powerful indications in both of these markets. For those of you, again, that are on the longer side of this, not long like a long position, but are interested in, some setups that require overnight margin and so on, multi-day type of setups, there's something going on in both the dollar and the euro. I'm going to just leave it at that, because I can't say too much, and I apologize for that. But these are setups that we think are really worth trading, because we only put out our best work. You know, if we see something that isn't fully mature yet as a setup for us and so on, we just don't take it. There's a lot more to trading than simply saying it should go from here to there. There's the whole trade setup, how it got to that point. And there's a whole story involved in it, and there's meaning behind it and so on. You realize this more as you begin to trade more, especially if you're a technical trader. And even a news trader is putting things together, thinking about old news, what happened when the news came out this way that last time, and how the markets act different this time, and so on. So both the euro and the dollar have very interesting setups. Both of them have had big runs, the euro big up, and then a big move down last week. That sets it up for something nice, and the dollar in reverse. And I think the girls like me, Dwayne, because over the weekend I was out, and I think they know I have, they must have known I had some cash on me, because the girls just kept telling me, leave me alone. And I thought they just wanted me to loan them some money. That's what I thought they were saying to me.
That's pretty funny.
Alone. I guess you had to be
there.
Yeah.
Right. Yeah.
Okay.
David made a very good point about it's important to know more than just get in here, get out here. I couldn't agree with that more. What you need is somebody who's actually going to take the time to teach you how to trade. Because otherwise, if you have somebody that's just giving you trades, then what happens when that person decides to retire, or God forbid something happens to them and they're no longer there? So it's great to have something that you can take action on, but your greatest goal should be not only to make some money today or put up some points or however you refer to it, but inside, deep down, I would hope that your aspiration is to learn how to trade, so that at some point, whatever method you learn, and the poor cat, you know, he's been skinned a million different times in a million different ways. There are so many ways to trade the market. I don't want to say any of them are right or wrong, just that there's a multitude of different ways. Learn some way. Learn something that you can hang your hat on, that you can call yours, that you can say, I understand this, and when I get up every day, I don't have to be baffled and confused and at the mercy of others' decisions and the market, and is the economy up or down, do we have a good president or a bad president, or we're going to get health care or not get health care. But you want to be able to read that chart, understand the information that's being conveyed to you. I promise you, it's not random noise. And we had on this radio program the man who wrote the book, you know, The Consummate Piece, Random Walk Down Wall Street. He was on the show. We had a very friendly and amicable discussion. He didn't change his mind, but at the end of this conversation, he did sort of intimate that perhaps there might be more to it than he had originally envisioned when he wrote that book, which is a historical landmark in the world of trading, the Random Walk Down Wall Street, because you really have to answer that question for yourself. Is it random or is it not? And so with that said, please pick some place, some way, some method, whether it's with David, whether it's with us, whether it's with Mike Reed, where you're going to learn a method of trading, some way that you can go into the marketplace each and every day and know what you're doing. Not be baffled, not be blindsided. You're not caught off guard by every new email that comes into your inbox that tells you how you're going to make $1 kajillion in your pajamas, before other people even finish their breakfast. Okay? That's not reality. That's not trading. That is called being taken advantage of. And so please don't be another victim. All right. So that's the euro. You said you had something in the dollar, but you can't talk about it. So
well,
what can you talk about?
Yeah, I can talk about this. I don't want to sound too cloak and dagger. It's just that we just had a meeting this morning, and this is stuff for subscribers. But I'd like you to at least review those markets because there are some interesting things. And one of the things I'd also like to say is that many of the people that are in Williams Edge, they already do know how to trade. And it's simply a powerful, in many cases, backup to their own insight, perhaps, into the market. They may have a feeling that something's going to happen, and then if someone that they believe in, comes out with something that's very similar to what they're looking for, or helps bolster their outlook, when we know that their technique and ours is almost certainly going to be very different, but coming up with the same kind of output, that can be very powerful confirmation for them to take trades, and that's one of the benefits that this kind of service offers. It also, over time, when a person watches a particular person with a particular style trade, you do tend to pick up some things, especially if you've been around the block and you've seen trading. You start to get a feel for that kind of, it kind of connects. It's almost like what I've talked about with how men don't like cats. A lot of men don't care for cats. We might like dogs, but we don't care for cats. One of the reasons we don't like cats is because they don't follow our lead. They don't follow what we're saying. They're very aloof and so on, and I'm not going to bother with you. That's the feeling that comes across. And so we don't want to bother with them. But if you were to live with a cat for a little while, and even though you're not studying the cat, you're just walking around the house doing your thing, believe it or not, you start to understand cats without even trying to make an effort. Your mind is really an incredible thing. Every one of your minds, all of ours, they're absorbing information all the time on a number of different levels. Some of them are less conscious, for lack of a better word maybe, than others. But we're picking up all this information. And before you know it, you start knowing what the cat's going to do. And the only reason you know is because you're living with the cat. So in much the same way, although Williams Edge is not a training program per se, it's really a confirmation program or new trading idea program for people to, here's what we think is going to happen and so on. People who are in it have said, and Levon himself, who's been on the program, that seeing these trades over and over again for them happens to be a very good way of, over time, they kind of get a feel for how our cat operates and walks around without even necessarily trying it. And some of them can even say, I'm not surprised to hear you say this is what you think it's going to do, because that's kind of what I was thinking. And all that coming together helps put a trade on in a particular direction or so on. And then, that confidence is very important to have in a trade. One of the guys that I know, I just want to mention this real briefly, one of the fellows had been through an emotional period in his life. And he was wise enough to not trade during that emotional period. And he cut all of his trading off. He went away for a number of months to straighten out the issues that he had to straighten out. That takes priestly restraint for most people to do that. But he's been around markets long enough to know that he is just going to spiral out of control, likely. It's not a good bet to trade when you're emotionally going through turmoil. So if you were, as an example, going through trouble with a business or with a relationship or something, and it was really hitting your emotions, it really was serious in some ways. Of course, you don't put yourself in front of the screen. Solve those issues. Get back on your feet emotionally, because the markets are already difficult enough without you being in a weakened position. And when you are in a weakened position, you tend to make decisions that favor your weakness. In other words, it pushes your weakness even further. And when you're in a strong position, you tend to make decisions that push your strengths. And so that's why it's a good idea to step away. And he did that. I'm only mentioning that because a lot of the people that we're dealing with have been around the block with trading. They're not necessarily brand new to the market or anything. And in talking about it, it just struck me that here's a guy that really knew the right thing to do for himself, and I think he'll do well now that he's back. It was about 5 months that he just needed to go take care of his other issues. And again, we're talking about major things that come up in your life, not something minor. You get into an argument with somebody, then you go to work or whatever. It's not like that, but something that really rocks your world. So keep that in mind. Let's see, a few other markets.
Paul has a question
Go ahead.
on natural gas. Do you have anything? He says it seems to have formed a bottom today.
Okay, let me get to it real quick. I want to mention a couple other markets, and it's actually on a different screen for me. But one of the markets I wanted to mention is the Australian dollar. It's a funny little market. I don't mean that in a bad way. I mean, it's just a funny little market. It does some unusual things. But it is in a very interesting position right now. I can't give you the full details, but I want to say we like the long side of the Aussie dollar. So check that out. Or come to Williams Edge and you'll get the full details of what we think is going to happen, when it'll happen, and so on. Okay, real quick, a few of the other markets, and then I'll scoot along here. We've already talked a little bit about the euro and the dollar, so we'll leave that as it is right now. We do have setups on that, so if you have an interest in either the euro or dollar, we do have current setups. One of them leads us right into tomorrow. There's actually something you can do right now that takes us into tomorrow in the U.S. dollar, and that's something that you might want to check out. A few other markets that we are watching. We always watch sugar, although we rarely trade it. We've had a couple of trades in sugar. We're watching the Canadian dollar. We rarely trade that. Nothing against Canadians. There's some really friendly, great Canadians. It's a beautiful city. Very ecological city. Let's see. I bet you they won't be coming for our health care. It's country, sorry. I was thinking about the city of Ontario, though, when I was speaking that.
Yeah.
But and I barely made it through high school. Also.
No, you're doing good.
I wonder if they'll keep coming over for our health care now that things have changed a little bit, if you know what I mean. Since they have to wait over there for health care, and over here they could get really high quality health care.
Well, we had a couple of people on the show say that they were happy with their Canadian health care.
Listen, I hope they are. I really do. I think it's fantastic. If anybody has a methodology or a system that works, that's fantastic. I have nothing bad to say about it. If you're happy with it, and I don't mean that, I mean that exactly like it sounds. That's tremendous. If you guys really have something that really works and you're not paying incredibly ridiculous taxes, then fair enough. I'm all for it. There it is. If they've got something that works, but I'd want to learn more about it. And I trust the people that, it'd be like me talking. In some cases, me talking about healthcare. I haven't been to a doctor, for my whole adult life. So I go to the dentist though, but I could say, well, my health plan is great because I've never had to use it. And I don't know if they are using. And some people in America here, we have the kinds of health plans we used to anyway. I don't know what the new one is, where every little thing that happens, you can get up and go to a doctor. And those are the plans you're going to pay more for. But the government knows what's best for you now. So you don't get to choose the kind of plan you get. In fact, you'll be paying for things like maternity leave, even though you're a man. You'll be paying for all kinds of stuff that you wouldn't normally need because they know what's better for you and I. So there you are. Isn't that good to know? At least somebody knows what's better for us than we do. Thank God for that.
Lord knows
because we haven't been getting it right. Yeah. We haven't been getting it right.
True story.
Okay, so let's see. A few other quick little markets here. Real quick. Okay, copper. Keeping a close eye on copper. I'm telling you, this market has been very unusual. There's something very big building up in copper. This one, we're just letting it. We're not doing anything with it right now, but we do have a substantial forecast in place for it, and we're going to wait for confirmation. There's a word, confirmation. And that means we're going to give up some potential gains to have the remainder of the move, which is a great way to trade. So, see, that goes against human nature. We want all of it. You don't rob a bank just to take $50. That's how people think, right? You go in there to get it all. But trading doesn't allow your human nature to be happy. The human nature just wants to grab it all. You have to be very understanding of how the hard way is the easy way in the markets. That means it's hard because you're going against your human nature, but in the long run it's easy because it helps you make consistent gains. The easy way is the hard way. That's the easy way. It's easy just to not use a stop. It's easy just to hold on and think they're just going to go to the moon when they're already turning back and taking you out. And that's all the easy stuff. And that's people try to do that. It's not like normal life. The markets are not like your normal life. And you can spend, like I did, 10 years trying to make your normal life absorb the market so it can fit into your normal life. It doesn't. It just doesn't. It's its own thing. It's a completely different kind of life. You have to step up to its kind of life to trade it. And it's unlike your normal life. It's not like the life like we've talked about so many times. It's not like where you can say, I'm going to drive my car. The building will likely be where it normally is when I get there. The people will normally that are there. The markets aren't like that. And we do want to somehow bring the market into our normal life and say, this is just another normal part of my normal life. They're not. The market isn't. That's why it's so difficult to do well. Because the other hours of your day are spent in normal life, and then you have to switch gears into the market, which is different. And as soon as you finally accept the fact that it is different, that for you, not because David said it or anybody said it, but that you've seen it for yourself as the truth, that the markets are really different, then you will stop trying to make them part of your normal life, and you'll realize, I have to be different because they're different. I have to be different because the markets are different. I have to learn how to act and think differently than I do in my normal life. And that's it. And then once you've accepted that and you've gone into it, you realize, wow, there really is something there and you can do something with it. And that's one of the reasons, I'll go on in a second here, but just one of the reasons I like markets that act unusual, because that freaks or worries or excites traders in certain ways, and it makes them unwilling to do certain things. And many times those certain things, I am now willing to do them, because I recognize that that's the old me that wouldn't want to do that. That's the person who wants the regular life wouldn't take this particular trade. We'll jump on that in Williams Edge because we've seen, that's taken many years, but we've seen this is how the markets work. There's a thing, there's a personality, there's the cat to it. You know, you can call the cat all you want and it won't come over to you. But you sit down a certain way on a couch and don't look at it, it'll come right over to you. Well, how'd you do that? Well, it works differently. It doesn't work like regular life. That's why I think that, you know, the market's kind of like a cat. All right, let's move on here. Enough of these damn analogies. Good Lord. No. Okay, so copper is real interesting. We're keeping an eye on it. We are flat in it, and you can learn the whole forecast that we have, the bigger forecast. We are keeping an eye on soybeans as well, and we're flat right now in soybeans. A few days back on the 23rd of October, we had a somewhat cat-like setup, if you know what I mean, with regard to the soybeans. They had sort of broken out a little bit on the upside, and there was a difficult trade to take. The trade was sell short between 13.16 to 13.18 on October 23rd and hold for a move down to 12.75. Decent-sized move, 40 points. And that move would normally be due on October 28th, and they did it. The market turned right around and went right back down. That trade might have been difficult for people who had not yet come to the ideas that I'm talking about, which is that the hard way is the easy way. And that one looked a little difficult because they were really pushing for higher prices there, but they were really just about to turn and go down 40 points. And that's what I'm trying to describe to you, is that that's the thing. You want to learn how they are thinking, how they work, and you can pretty much know that they work opposite to your human nature, to what it is that you want to see. And that's why they're frustrating you. That's why you have difficulty with them. And until you accept what I'm saying here as your own insight as true, not because I say it, when you do accept it, you'll start realizing, wow, I can actually do pretty good at this, keeping those ideas in mind. It's a big, big change. It made a huge difference to me. Anyway, so we're flat in soybeans right now. We are watching them like we all do every day. Fantastic market, the soybean market, and no one, I think nobody who trades in this market would say, I'm going to leave that alone, you know, because it really is a tradable, very tradable market, not peculiar, friendly, loving, sweet-natured. No, it's just a good market. So keep an eye on that. And we're, of course, in the January soybeans now, as you guys must know that. Now, somebody asked a question about natural gas. I just want to make my point on natural gas. Dwayne, if you would you put up a daily chart of natural gas? Be so kind to do that?
Sure.
You've got that somewhere.
What month are you trading?
December. I know I make this point so many times that you're not going to even have me on the program anymore. I've made it so many times. I just want to put a daily chart up.
This is natural gas, and this is daily.
There you go. Okay, go back a few days with your cursor, and you see that big breakout day there, the green bar, you know, back about 4 days, right there. Right. See that there? Now, let's just say that you were a trader who had just gone long the day before, and they closed brilliantly, and you say, you know what, that is fantastic. We are in the move. We're at the start of a good move here.
Right.
And the next day the market breaks down and tests the low of the bar that you got in on somewhere, and the position's already against you, and you're not using a stop.
Right.
And the day after that, they close just a little below it. And then what are you going to do? You're going to go home. You're going to hope. You're going to say, well, yeah, they did close a little below it, but not a lot low. So they didn't really have a lot of follow through. That's a great excuse traders give themselves. Not a lot of follow through. Okay. Then the next day after that, they went sideways. Well, things are looking pretty good here. You know, they went sideways. If they really meant to go down, they would have already gone down. You know what I'm doing. And then the next day they go down, and then the next day they go down, and then the next day they go down. And because you didn't do the right thing at the time when it didn't feel good to do the right thing, you took the easy way, and the easy way is the hard way. And now natural gas has had 3 directional days down. You're stuck in a position. Now your psychology is damaged. Now your trading account is damaged. You have a double dip damage party going on. And it's much more difficult to dig your way out of that than it ever would have been simply to say, oh, you know what, this is something I don't understand, this first day down, this October 28th. I don't like that, and I'm going to move my stop up a little bit, and boom, I got stopped out. Oh, that's too bad. Maybe you didn't get the whole move down. Maybe you didn't trade it on the reverse. But what you saved yourself was worth saving, which is a dramatic increased volatility in the wrong direction of your original trade, and the fact that you would have your damaged psychology. And so it really, I can't say enough about the use of protective stops in trading, because they will save your behind every time, and it doesn't feel good to have them there until you learn how really good it is to have them there. This is a great market. The guy had mentioned, hey, can you talk about soybeans? Here is soybeans, and I'll guarantee you there's people in here that went long on that day on October 25th, and they're still hanging on. And if I could get them on the phone and say to them, what do you think now, Ted? Well, I think they're going to come back. I think I'm going to be working this for a break even, so I might be buying them down here. What are they going to say? Of course. The same thing all human nature says. Hope springs eternal. This isn't the place for that. This is the place for stops. This is where you plan your failure. And if you plan your failure, you'll fail beautifully and you'll have soft landings. But if you don't plan your failure, you will land a whole lot harder than you ever sometimes believe is even possible. So plan your failures in this. Don't use hope. Plan to fail. Plan to have a spot where the market might go if you're wrong. And it doesn't mean that you're trying to fail. It means you're aware that failure is possible and you've accepted it. And that is a lot different than a lot of people think right there. I'm just going to go in and swing for the fences and so on. So what do I have to say on natural gas? Right now, not a whole lot more than what we've said recently. I don't think we have anything big. We do have something big coming up in natural gas, as a matter of fact, in Williams Edge, but I don't have even for them, I don't have a specific yet, and I need more confirmation. This move took me by surprise. So we weren't long, but we saw the move happen, and it just was a surprise move, and we've talked about this so many times. These surprise moves are so beautiful. They just trend beautifully. They run. There's no trouble if you can catch and trade surprise. We weren't able to on this particular one, but they've had a great move down, great fake out to the upside, all the stuff necessary to give somebody a lot of misery. But having said that, I do want to say that for us, December is the next really key month for this market for us. So we probably, there may be something between now and then on a shorter-term time frame, but we're thinking that December may be a very important month for this market to have another longer-term indication. I'll let you know if there's anything before then. So, Dwayne, I think that's everything we have. We have some stocks and some other things, but I'll save that for another time. We'll continue on.
Don says you skipped over crude in your normal sequence of events. Do you have anything on crude?
I know. He's pretty perceptive. Mm-hmm. Hey, man, you're trying to get away with it here without going to crude.
Cal wants to know if your soybean friend trades options.
He does. I asked him that very question, and he does use some options, but he's pretty much an outright futures trader / hedger. Since he's a producer, he has a real reason to hedge, and that means to lock in profits so that he has the stuff in the ground, it's growing, and he may say, well, these are prices that I would want to sell this stuff right now, but it's not out of the ground yet, and he can use the futures market. That's one of the original uses of the futures market, as I understand it, is for farmers to hedge. That's one of the original things we used to do for why there was a futures market. It reflected what prices were, and people could, the product's not ready to sell yet, but I like the price, and I don't want to wait until 3 or 4 months from now to see where prices are. I'm going to lock this in. I'll accept this price. And they do that by hedging. That means they short their beans because they own the underlying, and that locks in the price when they sell them, and they're able to get the price right at that time, moved out into the futures. And that's part of what not only farmers do, but your friendly gas station guy has to do that as well. The gas station guy has to do a similar thing because he doesn't get the gas put into his, he has to order that, and sometimes it's months out, and gasoline prices are changing and moving. And he has to pay for it and hedge it so that he can sell it for a profit because prices might be dramatically different at the time. So don't be too hard on the gas station guy up the street because he has an interesting and tricky job to manage
the gas station
business.
guy, the margins on gasoline for the retailer are razor thin. We're talking pennies.
Yeah, I don't know what it is, but you're probably right. It's very.
You roll into Circle K or QT or wherever, and you think, man, look at all these cars. These people are just getting filthy rich. But I mean, they are, of course, trying to sell it at a profit. But because of the competition, I mean, if you're in a major city And if you go to any major
Sure.
intersection, you're probably looking at 3 gas stations. Out of, the 4 corners, there's probably, at least 2 of those corners have a gas station, whether it's a convenience store or whatever it might be. And so, yeah, they don't make a lot per gallon, so hopefully they pump a lot of gallons a day. That's what they're banking on and betting on, and that's why you've seen the smaller gas stations go by the wayside, the ones where they would come out and be very friendly and wipe your windows and pump your gas for you.
Just like in Back to the
oil.
Future.
Yeah.
That scene.
Yeah.
They all come running out and they all service your car.
Richard had a question. Does David have a level on the upside that if the market goes above, that instead of a low into the 18th, it could possibly be a high into that time period with the potential?
Which market?
Also,
I don't know which market he's talking about, but
he didn't say.
Let me just address the fellow on crude though real quick here.
Oh, okay.
Crude, yeah, he had asked about crude, and I only have this to say: we had a forecast out for crude that once this move down occurred, that if the market got below 96.50, then it would be a short to a 94.94, which it has already done, and then there's a second level below that. We're waiting, and all that would happen last week plus 1 week, which is this week. So we're waiting on that to occur before, in other words, the old forecast is not fully matured for sure yet, and so we're waiting on the sidelines for that to happen. One thing I would say in the shorter term just for this week, that if we were to close this week, this is not a forecast for this to happen, but if we were to close the week above $93.90 to $94, that would then also help the confirmation or early confirmation for a multi-time period long position. As it is right now, we're still in the short from the break of 96.50, and this is the theoretical turning into the actual right here. We're trading it and managing it as it goes along. So I think a better answer for you for the question is let's see if they're able to follow through any further this week, and then we'll have a bigger setup for crude oil. So they have a tremendous market. This is a fantastic market to trade if you're not trading in crude, whether short-term with Dwayne and Michael or yourself or however you put your trades together, or longer term, with or without our help. Either any of it. The crude market is just fantastic. And we've had Levon on before, who himself spends 95% at least of his time trading crude. It's just that's his S&P 500. You know how we all love the S&P. The crude is his S&P. And so we'll see how this continues into next week. And I don't know what the last question was, but if he'll save it for tomorrow, Dwayne, we'll
Yeah, Richard was asking about the S&P.
About the S&P. The only date we gave out for the S&P was for the decline from the week of October 28th down to November 4th would normally have been the bottom, and obviously at 13 or 1746, obviously it came 1 day early. So that's the only, I think that's the only forecast we've given out. We do have one other setup, which I mentioned, that has to do with the week of November 18th. I can give you the full setup for that. We're not expecting November 18th to be a high. We're expecting November 18th to be a low. So that is, I'm not sure if his question was revolving around that or not, but we'll see. We'll go over it with you more. But I think that's everything we have, Dwayne. I'm going to go see if I can get a doctor and get some health care, All
right, buddy.
Website.
Sounds
just
good.
Sign on, and, everything should be good, don't you think?
I think so.
All right. Thank you, guys, for the questions. I appreciate it today. We should have an interesting week. I'll see you, Dwayne, and all of you tomorrow.
All right, David. Have a great afternoon.
Thank you. You too, Dwayne.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you.
All right, guys. That's going to wrap it up for me. Let's go back and take a peek here at the S&P real quick. Karen asked, When you give the 1757 number, is that number good to trade off of for all week? I thought it was for just one trade last night. Oh, that's right, Karen. You are a little bit new. Also, how do you get the candle prices to fit on the screen? Let me go to that. Okay. So that trade I gave you guys here, I don't know if you took advantage of it or not, but you've got 1.5 points in it right now. Remember, 60 to 62. Roll the tape back, and I suggested that you take this. If you don't have your 2 points for the day, if you've already got your 2 points for the day based upon your business plan, your trading plan, then that trade should only be taken in the simulator. Okay? I know it's hard to resist, but you've got a plan. You've got to follow your plan. Now, let me address your question, Karen. How do you get the candle prices to fit on the screen? I'm not sure. Are you talking about over here? Tell me where you're talking about, or where I've actually used the text tool to type something in. Also, and while you're answering that, let me go ahead and answer your other question. When you give the 1757 number, is that number good to trade off of for all week? I thought it was just for the one trade last night. Okay, you're a little bit new, but I've been saying this forever, and I'll just keep saying it as long as it holds true. We believe that important prices and important areas are almost always tested. If we give out a tweet or an alert, and it works out, and you can go back, and if you walk through our Twitter timeline, you can go back a couple of years if you want, but you'll see us talking about this concept over and over and over, that if the tweet goes off well initially, there's a very high probability that price will come back to test that same area. And if it's good for one, in most cases it'll be good for two, sometimes three. We've seen it go four. A few months ago we had a crude tweet that off the same number we had 5 beautiful trades. So what you do is you simply watch when price comes back to that area to see how it's going to react. Okay? Can you just bank on it and blindly buy that number again? No, I would never suggest that you blindly do anything, but watch it very carefully to see if in fact it will give you that opportunity. So last night we had the number 1757. Let me get my text tool. 1757. So tweet 1757. Okay. So on the initial move, it went up 3 3/4, and then it came back. And this is where it initially tested. And it went sideways for a bit, and on this move we had a swing high up to 58.75. On this candle, we actually had a high also of 58.75. And then we came back, tested again, okay. Took us up to last week's zone at 62.63, and then this last time it came back, just literally that hour closed right at 57. There's a little bit of a drawdown. Let's see, we drew down to 56 here on this candle, so there was a 4-tick drawdown. And so, you would let that drawdown perhaps go by, and then as you're closing out this candle, this hour, a little iffy. So what I did, the trade that I gave you guys here on the radio today, is consider being long 60 to 62. Let's take a look at that. Okay, there's 60 right there. See, what I wanted to do was I wanted to get above the high of this candle. The high of this candle is 59.75. So I want it to be above that. And we're seeing this thing just repeat itself, okay? And so that's where the call from 60 to 62 came from. Now I could have played it, I could have traded it off the 57, but so much time had gone by that that didn't seem practical. And the thing to caution here is 62 isn't actually a zone. It's still a zone from last week, but we're obviously seeing the carryover effect that the zones have. Anytime you approach a zone and you get within a tick, 2 ticks, there's always the chance, like here, see, each time price has interacted with the zone. Here, sellers took it all the way down. Here, sellers stepped in a few ticks early, drove it down. Over here, they came in real early because they had such a field day with it over here. They came in early here. So you look at that high, and then that high. Okay. Now we changed things with this move because we, instead of put it, see there's a high, a lower high, a lower high. Actually, we had an even lower high here. This is where the change started. You've got a high, a lower high, a lower high, and then you get a higher high, and then a higher high. So the market would seem to be calling for possibly even a higher high here. So this trade, 1760 to 62, it ran to 61.75. So we were looking for 8 ticks. So far, it's only gone 7. Okay. Now these numbers represent points. So let me clarify this for everyone. This is not 7 points. This is 7 ticks. In the S&P 500, it takes 8 ticks to make 2 points. Okay. So far, this has gone to 62 or 61.75. So back to your question, Karen. Whenever I put out an alert, okay. Now they don't all run to their target. Again, the timeline is public, so anyone can go and meander through it and look at your charts, and you can figure out whether you think it's consistent enough to be of benefit for you in your trading. But when this makes the run and comes back, I always want you to ask yourself, we're back to the important price, important area where we triggered for the long, it went well. How can I position myself to take advantage of that same move again if it unfolds? Okay. Now what you might do is you might use the slingshot. Okay. You might use a break of the previous, these little swing highs here. Okay. And those are things that we'll talk more about, Karen, in the partners meeting. Bring that question up again, if you will, Thursday night in the partners meeting, and we'll go into some more detail. Okay. And I'll try to explain that. It looks like this thing really does want to go to the 62, so that 7 ticks will probably become the 8 ticks here in a moment. The really big question, but again, until it happens, there's no guarantee. Now, the bigger question will be, can it break to the other side? Because those of you who are partners and got your zones this morning before the market opened, you know that we've got a zone overhead that we haven't really come close to yet today. We're still feeling the effects, the carryover effect of last week's zones. So we'll talk more about that tomorrow as well. I hope that answered your question to some degree, and again, be sure to bring it up Thursday night, and we'll go into as much detail as you want. Now, back to how do you get the candle prices to fit on the screen? Sometimes the prices go below the top or bottom of the chart, and I don't know how to adjust it to fit on the screen. Oh, okay, I got you. All right. There's a couple ways you can do that. One way is you can right-click just anywhere on your chart. Just find some empty space, go right-click, go to Area, and click Auto Min-Max Price. That's one way. Okay. In fact, let me go to a chart that I'm not using, like this one. Okay. So let's get this one. Let's make it get all wonky. Let's put it on 30 minutes. That ought to mess it up. Okay, see how when I went 30 minutes you can't even read that? Just come over here to this column, double click, and it stands to attention. Okay. Now, if you want this to go higher, just come over here, left click in the price column, and then scroll on your mouse, and you can walk it right up. You can walk it back down. Okay. Now, if you want to make your candles taller, hold down the Shift key. Remember, you've left-clicked in this column. Hold down your Shift key, make the candle smaller, or scroll your mouse the other way and make the candles, you can make them taller, then release the Shift key, bring them back into view. Or if you've made them taller and they disappear, then just come over here and double left mouse click, and that'll put them right back into perspective for you. Also, one last thing here, if you left click, empty space, hold down the Shift key, and scroll, you can make them get wider, or you can scrunch them up so you can see a whole lot of stuff at one time. For instance, let's say you're wanting to draw some really big fibs, so you scrunch it up like that and drag it from that high to this low, okay, so that you know, in fact, now from the swing high that was put in what is this, crude, back on October 30th, to the most recent swing low put in on November 4th, which would be today. This is just a 30-minute chart. That what we've hit here is a 24% retracement. We've got a little double top going there on the 30-minute chart. Okay? All right. So now that we know that, now that we have an idea as to why price stopped the advance, okay, let's make that go away. Let's open this up. Let's make them taller. Now remember, we know that this area is the 24% of a much larger time frame. The larger the time frame, the more important the fib numbers. Okay. I don't use fibs, as you all know, as a standalone trading methodology. I simply use them as an analytical tool and a confirmation tool. Now, we were doing the reverse from the high to the low. Now we're going from the low to the high. Okay? We have a 50% retracement from the low put in this morning. Oh, by the way, I should mention this to you guys. You know how I'm always telling you that the times at the bottom of the screen are Pacific time, my time. Well, daylight savings is over, and now we're back on standard time. And so Arizona does not do daylight savings time. And so part of the year, the bigger part of the year, we're on Pacific time. But now that the rest of America is back on normal time, we are on Mountain Standard Time because we don't change. We don't go on daylight savings time. So now the numbers you see, from now up until I think it's March of next year when we go back on daylight savings time, the numbers you see across the bottom will be Mountain Standard Time. I used to chase around all the different charts and put everything on Chicago time, and then I did East Coast time, and then I just decided, you know what, I'm just going to leave it on my time. Okay? And so anytime something on my chart might look a little different than yours, just know that my times reflect Arizona time, which is currently Mountain Standard. I might be better served to just leave mine on East Coast time. In fact, I'll give that some thought. It might be better for all parties involved if everyone just instantly looked at it and realized that, because I think most people tend to set their charts to the East Coast. I don't know. I don't think we need to take a poll or hold a vote or anything. But if I do change the way I've set up my charts, I will let you guys know. So, but for now, these are Mountain Standard Time. So this morning at 5 a.m., in the 5 a.m. 30-minute candle. We put in that swing low. Okay. We rallied up to the swing high here. This is on, what is it, crude. And we've now pulled back to a 50% retracement. Here's the move. Here's the retracement. Okay, now, here's what did we fail to get here? A higher high. Okay? Leg, retrace, leg. If this were going to be a reversal, then we would expect to see a higher high here, and then a higher low, and then a higher high, and a higher low, and a higher high. The fact that we failed to put in a higher high might mean that this move is not quite ready to rally. Okay. Now, if you came in here at this 62% retracement and you bought 94.46, even though they were unable to put in a higher high and show that this was actually a reversal and not just a retracement, you still had the opportunity to make 50 cents between 94.46 and 95. I'm just saying if you had bought at that price. But this is important information. Okay, the fact that they did not manage to put in a higher high. Now they've come back again to this 50%. Now we could draw fibs of just the last leg. In fact, let's do that. Now remember, from the swing low of the day, we're sitting at right now at a 50% retracement. Okay, after a failure to put in a higher high. All right, so now let's make these fibs go away. Now let's measure just the last leg. Okay. All right, now let's open that up a little bit so you can see it. Okay. So now what do we have? Well, based on just the last leg, we actually have a 62% retracement. And we've kind of blown past that 62. What I would consider to be a window of opportunity at this area here, there is a good probability. I mean, we may already be seeing it here, okay? See, when price came down and spiked this low, look how quickly it shot back up, okay? So there were buyers waiting, okay? They were waiting to buy this pullback, and they ran it up. But the sellers, remember, up here at this swing high, there were people who made good money on this down move. So you've got these two warring factions here. You know, these guys making money pushing it down. These guys buying it and running it up. Okay? Question is who's going to win? Well, I don't know who's going to win. And honestly, I don't even need to be on the winning team. What I need to do is I need to be on the team who currently has the ball, and I just need to be on their team long enough to secure my 2 points or the equivalent thereof for the day. Now, when we say 2 points, we're typically talking about the S&P 500, pays $50 a point, 2 points, $100 a day. That's kind of our benchmark. Now, here in crude, that would be 10 ticks, okay, the equivalent. 2 points in the S&P, $100. In crude, you need 10 ticks. 10 ticks to make $100. Now, does this little window of opportunity down here provide that? Well, let's take a look. If we want to get in, we're going to allow for the fact that those who were savvy and bought it here and ran it up to here, they did well. Okay, prices come back down to test this area, and already they've ran it up from the low at 94.56 up to the high at 94.68. So again, the low of this candle is 56, the high is 68. So this candle, the range of this 30-minute candle is 12 ticks. So had you bought the low here before it ran up, you could have picked up your 10 ticks, your 2 points for the day, off of this candle. But that's, you know, taking an awful lot for granted that you were in position and had some idea, some reason, some plan, some method that was going to put you into the market, because remember, we're just measuring the last leg, and what we have is an overshoot of the 62% retracement. Okay, and since we haven't closed back above that 62, and since this is a 30-minute candle, we're going to get a new candle in 9 minutes. A close below here has my attention, but I can't forget these guys. These guys who really liked buying at 94.51. The guys who bought 94.51 saw it run all the way up to 95. 94.51 to 95. So that's from 94.50, what is that, 50 ticks? So we see it takes 10 ticks to give you the equivalent of 2 points. So from this low to this high, you know, if you're looking for 10 ticks a day in crude, then that was your whole week if you were in this move. Most of us weren't, okay? I'm just trying to show the opportunities and possibilities and why I break things down the way that I do. So see this thing's turning red. I suspect we're going to see a bearish close on this candle. But see, that borderlines on telling the future and, you know, being, and I'm not that, I don't do that. That's not my thing. So what I want to do is I want to watch and see if we can actually take out this low. Okay? Now if we can take out that low, see, this low was 94.51. And so the top of this little box is 94.49. Okay, that's 2 pennies below this swing low. And so from 94.49 all the way down to the bottom, 94.39, that's exactly 10 ticks. That's almost good enough, but not quite, because I believe that those who bought here at 94.39, I believe they'll come in early and at least attempt to run this thing up again. They may not succeed, they may not accomplish much, but if they do, it's going to prevent me from getting my 10 ticks. If my window of opportunity says, Dwayne, you're going to be short from 49 to 39, I have to make the box a little bigger to represent the 39. So if that's your window of opportunity, you have to be willing to not think that these guys are going to step in, not only step in at 39, but potentially step in early to try to run it back up again, because they didn't have a lot of resistance. They ran it up pretty good there, okay, over the course of, these are 30-minute candles, 1, 2, 2.5 hours. So I'm going to pass on this opportunity because the window's not quite big enough. If I'm trying to get 10 ticks out of a move, then I want there to be, you know, I want my playing field to be at least 15 ticks, preferably 20. In other words, I've got some cushion on this side and I've got some cushion on this side. Cushion here before the sellers kick in, cushion here before the buying kicks in. I'm just looking to catch this little piece, little sweet spot right in the middle. Okay? Who ultimately wins, bears, bulls? I'm not even concerned about that. I just want to know that I am playing on the team that currently has the ball, and if we can just make a first down, right, 10 yards, I'm great. And then I'm content. I'll go play with the other team tomorrow. But if I'm successful in my endeavor, let's say that, well, we already know that we can't take this one because it's just, there's not enough room. So let me leave it at that. I don't want to confuse the issue anymore. I've showed you how to make your candles taller, how to spread them out. We've talked about tweets, important areas, how important prices, important areas. We believe that they are almost always tested. We now have a swing high on this candle of 1762. So for those of you that took that trade, congratulations. I'm glad it worked out for you. And so let me just make my notes here. $17.62. Okay. So tomorrow when we talk about it, we'll have good notes. And this is what I encourage you guys to do. Always make good notes. Everything that you do. Not only what you do, but even maybe what you think. You know, what's going through your mind as you're making a decision. Because you might think, oh, well, I'll remember that later. Nah, no you won't. Probably not. After making 5, 6, 7 trades over the course of a day, if that's how your day goes, then remembering the intricacies of each and every trade and where you were at and what the market was doing and what the talking heads were saying and how you felt and how you're not going to remember it, okay? Now, writing it down can be time-consuming, and it can take your eyes off the screen. So one of the tools that I recommend is, depending on what kind of computer you have, you may already have some kind of built-in voice recorder. Okay, check with your, if you're on Windows, go to all programs and see if your machine came preloaded with some kind of voice recorder. If not, you can go out on the internet and download one. You can find freeware. Okay, all it's doing is just recording. You got to put your headset on. I'm assuming you have a headset. Put your headset on, and as you go to put on a trade, blah blah, you hit record, and instead of taking your eyes off the screen to write down whatever it is that you want to remember, you just hit record, and you start talking, okay, and then you hit pause, and then you record and pause and record and pause, and make sure that you're using some type of voice recorder that allows you to pause and continue. Some of the freeware versions will send you, it'll like start the file all over again. What you don't want is, you don't want a bunch of broken up individual files. You want one long, when you play it back at the end of the day, because what I want you to do is I want you to transcribe all the stuff you said. I want you to transcribe it into your journal, okay? Journal that thing, man, because something happens. Number one, when you hear it played back, you may see flaws in your thinking, because now you're not a participant. Now you're a observer, right? And as an observer, after the fact, there's no emotions, there's no cash on the line, it's after the fact, you will see those exact circumstances very differently, through a different lens, if you will. And then as you write it down and you hit pause and write, listen, hit pause, write. I'm not saying you got to write every word, the and the hum and the whatnot, but the basic points, the important things, okay, you want to write those down, because as difficult as it is at the end of today to remember the first trade you took this morning, when the end of the week gets here, Friday afternoon, imagine how hard it's going to be to remember the trade you took Monday morning, Friday afternoon. Unless you're superhuman, unless you're that lady on that TV show, Forgettable or Unforgettable, which is a great show, by the way, just another cop show. They're all cop shows. They're either cops or attorneys, or we don't have many doctor shows these days. Used to be a lot of doctor shows. Marcus Welby, of course, was the granddaddy of that genre. But so anyway, she's a cop, and her mind, she has this, what do you call it, photographic memory. She remembers everything that's ever happened, every moment of every day of her life. It's kind of, there are people actually like that. I saw a documentary recently. They took a kid, I think he might even have autism, or maybe not autism, but he's autistic. Is that the same? But they flew him in a helicopter over Manhattan, and then they took him back into the studio, and they gave him this huge canvas, and from memory, they flew him over Manhattan one time in the helicopter, took him back to the studio, and from memory, he drew the entire cityscape of Manhattan. And the guys who did the forensic analysis afterwards say, you know, with the exception of like a couple of windows that he messed up in Brooklyn or something, he pretty much got it all perfect. Wow. Would you want to remember everything that happened, every moment of every day of your life? Seems like that would just be overwhelming to have all of that information. Well, and they say we all have it there. And it's, you know, but the thing is we don't all have the mechanism that allows us to access it the way these, and often they're not referred to. Well, this kid, he may have been referred to as a savant, but I think, I'm almost positive they said he was also autistic. So anyway, getting way off track there. Oh, JM says, why don't you just adjust your time to the standard trading time, EST? I might do that, JM, just for you. Dan asked, I know I've asked you this before, but how do you get the high and low of a candle? When you put your cursor on the candle, it shows highs and lows. Mine does not. What you do is you go right over here, Dan, and see this little arrow thing right here? Click that, okay, and then I think you're going to need to drop this down to, let's see if current profile does it. What you're looking for is a little thing called tooltips. Now, some people hate them. Michael won't use them. I like them quite a bit. Oh, here it is right here, okay. So we opened up this window like this. And then we dropped it down and selected current profile. That may be the default. And then just come down here until you find, oh, you got to scroll it up. Tooltips, right there. And then you just click that, and you can turn it. Yours obviously is set to off. Okay. I would be at a loss without them. They're very important for me. But there again, you know, different things for different folks. I like being able to hover over that candle, know the high, the low, the open, the close. I like that. There's another thing you can do too. Up here in the corner, you can show the data box. Where's that at? View. Data, show data box, okay, and so by hovering over a candle, that shows you the high, low, open, and close, but it shows you up here, because some people find the tooltip popping up like that very distracting. So if you'd rather not have that pop up, if you find that distracting, you can do this, you can do it this way. Actually, now that I think about it, I might go to that method, because with my tooltips, see, they show for a few seconds and then they disappear. And sometimes I don't finish my thought before it disappears. But if I used this method, and you can move this little guy around, you know, I could put it right there, and then when I hover, it gives me the high, the low, the open, and the close. I'm going to give that some serious thought. Okay, let me see if there's any other questions. If I've missed a question, guys, you can copy and paste it right back into the bottom. Dan, hope that takes care of that issue for you. Yes, Karen, I do record the show each day, both the audio and the video. Some days I don't do the video, but I do the audio every day. I'm way behind, way behind. I'm embarrassed at how behind I am in getting the podcasts uploaded. I wish it was a job I could farm out to someone, but unfortunately I can't because I just can't. Those files reside on the radio server. I suppose I could copy them off to an external drive and then ship that to somebody and have them upload them, because it is time consuming. But for 5 years I was really good about getting the podcast uploaded almost every single day. Just every now and then I get a couple days behind and somebody would mention it and I would get caught up. Now I'm like a couple months behind, maybe 3 months behind. Our podcasts are available in the iTunes store. You can subscribe there. You can go to our website, go to the trading blog, and there's years of podcasts that you can listen to. Today's podcast, you know, maybe what I should do, because this really has been a burden on me, how are you going to get caught up, Dwayne? How are you going to do it? And the answer, of course, is I don't know. So, because I'm dealing with the burden of how to get caught up, I let another day go by where I don't do anything. See, how insidious is that? What if, Dwayne, you just went ahead and uploaded today's podcast and today's video cast, because I did record video today. What if you just uploaded those tonight as if nothing had ever happened? You have not solved the problem of all the ones you're behind on, but you have solved the issue going forward, because now you get back on track doing it every day. And when you find extra time, spare time, hey brother, could you spare a little time? Then you can fester over getting caught up. So even if I can't get caught up today, I can stop getting farther behind. You know what? I'm going to do that. So, in answer to your question, Karen, was that Karen? Yeah, that was Karen. So, in answer to your question, Karen, today's podcast will be available later today, this afternoon, early evening. Now, if you subscribe, I think you're notified as soon as one's uploaded. Like if you go to iTunes or something and do the subscription there, just go to iTunes and search Emini or Christian Financial Radio Network or Dwayne, and it'll pop up. You can subscribe. Oh, there's actually a link on the blog. You just click the link on the blog, and that'll take you in and subscribe you. If you're not an Apple person, you don't have iOS, then just go to the blog and subscribe there. And that's what I'm going to do. I feel so much pressure off of me. Gary, show again how to record. That's good, Michael. Employer minor children, they work cheap. Oh, you know what? And my son would have loved that job. Unfortunately, he's on restriction right now from his tech toys. This could be a smooth daddy move where, even though he's technically restricted from playing with his tech toys, this falls under the guise of work. But for him, it would be pure, unadulterated joy. That's a great idea. Gary, show again how to record. Now, Gary, tell me what it is you want to record. Are you wanting to record audio for yourself? Bye-bye, Karen. Have a great day. Tell me what you want to record, Gary. Are you talking about what I was just talking about, where you record your voice? So at the end of the day, you can go back and actually journal your trades and write them out. Is that what you're referring to, Gary? Because there's nothing built into this software, to the DT Pro, that allows you to record your voice. Daily trading candles of a market day. Are you, I don't know, maybe you're talking about this. Okay. Now this works even if you're on demo. Okay, even if you're using a demo platform. Go to File, Plugins, Market Replay, launches this little guy, and you hit the record button, and what that does is that records all of the data, all of the market data coming into your computer for up to 5 markets, and then at the end of the day you can play back all of the data and it will rebuild these candles. It'll be just like you're watching the market from the opening bell or whatever time you turn it on. It works just like a VCR. The thing I was talking about today is downloading some type of freeware voice recorder software so that you could literally talk to yourself during the day as you're looking at a trade, sizing it up, putting it on, all of this stuff, so that at the end of the day you can go back and reflect on what happened, what transpired. You'll be able to spot your strengths as well as your weaknesses. It's an amazing tool, okay? And it gives you the ability to transcribe it into a handwritten journal, which I think is very important. So if you don't have some type of voice recording software on your computer already, just go to Google and just search free voice recording software, okay? Now you might want to get something fancy. You can probably get a fancy one with bells and whistles for 20 bucks, but I know there's freeware out there. Audacity is one of them. Been around forever. It's completely free. It's just like a little tape recorder. You just hit the little red button, record. You talk into your headset, and then you hit pause. Don't stop it, because if you stop it, it's going to create a separate file. You just want to be able to hit pause, record, pause, record, pause. And I think any of you, whether you're a partner or however you do your trading, if you're already just nailing it, then you probably aren't even listening to this part of the program, okay? But if you're working on it, if you're trying to get from here to there, and your goal right now is not to figure out how to spend all your money, but your goal right now is to try to figure out, try to learn how to trade, I think that you'll find that is just an incredible, indispensable tool, one that you will want to take advantage of. So please do, okay? Please take advantage of that tool. Go Google free voice recorder and start recording yourself. And as you express yourself in the heat of a moment in a trade, what you're thinking, what's going through your mind, when you listen to that thing play back, at the end of the day, through the different lens, when you're calm, cool, collected, you're not nervous, you're not all worked up, you don't have a knot in your stomach or sweat on your forehead, and you're looking at the chart and listening to your voice, something is going to happen. Something is going to click. And after day 1, I'm telling you, you just do this one. I want you to promise you do it for 5 days, whoever you are. Promise you'll do it for 5 days, but I can tell you one thing. After day 1, your trading is going to change. Because you're going to know on day 2, oh boy, I'm going to have to listen to myself at the end of the day. As half the foolishness you do, you're going to get rid of it day 1. Because you're not going to want to have to be held accountable at the end of the day to yourself for what you said and did. Great tool. And remember, you heard it here on CFRN. All right? Okay, guys, so that moved from 60 to 62. It went off, and now we're back testing 60, okay? But remember, our real number is 57, right? That's where we started the party. Swing 1, swing 2, swing 3. Will there be a swing 4? I don't know. I do not know. If it comes back to 57, I will look for any opportunities to get long. if it blows through 57, okay, blows through 57 and then comes back, you know what, does a little pullback and then stalls at 57, then we'll be looking to short. So I'll leave you with that thought. If price pulls back to 57, stalls and starts to move higher, look to your slingshot or whatever other tool you have to get long. If we blow through 57, in other words, we drop below 57 and then pull back up to 57 and stall out, then consider getting short. You want it to look something like this. Okay, like that, like that, and like that. And you're getting triggered in right there. Now it'll work the same in either direction, long or short. Well, if it's going to retrace to 57, couldn't I just get short here and ride it down to 57 and then make my decision if I'm going to be long or short? Well, you could. But are you sure it's heading back to 57? Well, how would I know? Well, you could look at this and then look at this and then see if it does this. Okay? And where would that break point be? I think you know, right? Now you also have to ask yourself this question. From the swing low here up to 62, there's a lot of stuff that could get in your way on the way back to 57. Not saying there's not a trade there, just saying that there are some obstacles that need to be overcome. Trading it back to 57 would be what some would refer to as fading the trade. The trade has been long, long, long. Now, on this long, was there a short? After this long, was there a short trade as we reset to go long again? Yeah, there was. Okay. But the original trade we were looking at and focusing on was the long side. Okay. So, again, could you get short on the move back down? You could. Personally, I'll wait myself just to see what happens when price comes back to 57. If it comes back to 57, okay, there's nothing that says it has to come back to 57. You guys know where the zone, partners, you know where the zones are up here. Anybody can know them that wants to take a free trial, okay? Zone up here. Market may, you know, we're getting late in the day on Monday. Market not too far from closing on Wall Street. It's what, 319. So take that all into consideration, and I'm going to see you all back here again tomorrow. Thanks so much for tuning in, whoever you are, wherever you are. May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.